as a reference point. But as long as you're holding about the 24,200 odd or the 20 DMA, that vicinity of around 24,350, if the bulls can hold on to those levels, they'll be counting on, trending higher even from here. Because the screen is telling you a story, right? We have some negative news flow that's come in earlier this week, and that dip has just got bought into. But for the markets to actually go ahead and take out that all-time high on the Nifty Bank needs to participate. Even as we speak, the Nifty Bank is as flat as can be. And that's the problem pocket, because on a day-to-day basis, the Nifty Bank is making lower lows. So we'll have to keep an eye on that. Even today, it's made a lower low, and then it's bounced closer around 400 points. The reference point on the Nifty Bank that I've been making this point on a day-to-day basis, support is at around that 50,500 odd. It needs to hold on to that mark, and the 50.
Stay tuned.
Not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
The French are getting the Olympics off to a really smart start. Just consider the usual, where you have an Olympic stadium and the host country sets up effects and sets the stadium up as a stage on which to exhibit its unique talents and its history, its culture, really the showpiece for what it wants to present to the world. And consider the difference here in Paris. All of central Paris is now the stage. The Olympics athletes, the contingents will not march through a stadium. They will travel on boat along the river Seine right through the heart of Paris, a 6-kilometer long stage. Consider just how many people will watch this, about 500,000 expected, and that's a lot more than anything you can cram into a stadium. So for the first, at the first level, it really means participation, involvement of the local people and of French people, and no doubt visits money sense. And to that extent, France and Paris particularly are already a winner.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government promoted fund. This measure is expected to help 25,000 students every year.
Welcome back. Well, Chalet Hotels is the next management on the show. It reported what was a good set of numbers in what was a challenging quarter. So Q1 was impacted by, for example, elections as well as heat wave. To discuss this and more, we have Sanjay Sethi, who is the MD and CEO of Chalet Hotels, who joins in now. Mr. Sethi.
Good afternoon, Ekta. It's a pleasure being back on CNBC. Look, as you mentioned, it was a quarter which was challenged on account of a massive election process in India. And, the impact impacted the industry by almost about 6 out of the 12 weeks in the quarter. And Q1 is never really the best quarter in the war. So overall, satisfied with what we did in Q1. The true story for hospitality really is after Q2, because H2 tends to be a much stronger quarter. But the industry more on strategy in on occupancy in most of the hotels. And because MICE was slow, we've had to rely on independent travelers. We've still had 4% RevPAR growth on a same-store basis. Overall, if you add the new inventory to the portfolio, then the RevPAR growth is around 2%.
Okay. Mr. Sethi, you said you did well in a time when the industry saw some weakness in Q1. Despite that, margins have come in closer to 39% this quarter. Is this something which would be sustainable, or you'll be able to improve? Because, as you said, second half would be better than the first half. So will margins improve from here on?
Delivered 40% EBITDA margin on a segment of hospitality. So you may need to change that to
That is
correction.
the EBIT margin, Mr. Sethi.
Oh,
it's
EBIT,
not
sorry.
the EBITDA
I'm sorry.
margin.
I'm sorry. My fault on that one. Yes, you're right. The EBIT margin was that much. But EBITDA will continue to grow. Q2 will be better than Q1. Q3 and Q4 will be significantly better than Q1 and Q2.
Okay. What did you end FY24 with in terms of the number of keys? And you do have a target of around over 3,090 keys odd in FY25. Where does that target stand now in terms of achieving it? And are you on track for FY26 as well as FY27 in terms of the number of key additions?
Yes, in fact, very much on target. We've closed this quarter with 3,052 rooms. We expect to add another 200, and so with that, we should hit roughly around 4,000 rooms. We've today also shared with the market the fact that we are closing a deal in Goa. It's a beachfront property in Goa, positioned at the luxury end. And what is greenfield, so it'll take 3 years to build out. And we expect to deliver roughly around...
Right now, right, and the puddles. But Mr. Sethi, I just want to understand, what will growth be led by from here on? Will it be addition of new properties, or will it be higher occupancies at existing properties? Because I was reading a news piece which suggested that globally airlines are cutting fares because now they don't expect the same amount of demand that they saw in last 4 years. Is this something that will happen in India as well? Is that an expectation? And what does that do to the hospitality industry?
India lets to be in a part of a cycle which is early upside cycle that we are witnessing now, because the supply side will only really kick in over the next 4 years. Demand continues to outpace supply, and therefore we expect both occupancies and rates to grow quite aggressively going.
Okay, you do have some properties which are coming up. For example, the Kandala Dukes property as well as the Westin Hyderabad.
Dukes was acquired and went in for major renovation, repositioning and expansion. We are likely to open out the first phase of a small inventory of 37 rooms with new public areas before the long weekend of 15th of August. But the whole property with 145 odd rooms will be commissioned sometime in this.
Okay.
So, typically office rentals throw up margins of about 80 to 90%. So it will be margin accretive, to answer that part of the question. We have currently 2.4 million square foot of office space ready. Half of that is already leased out. We expect to get to at least 90% leasing by end of this year. And at that time, this 2.4 million square feet should, on annualized basis, throw up about 280 crores of EBITDA and be value accretive for the portfolio. We've got another 800,000 square feet or 900,000 square feet, which we're in early stages of development of a second tower in Mumbai. When that gets completed, we'll hit about 3.3 million square foot of office space. And by the time that gets completed, we expect the office portfolio to throw up roughly around 400 plus crores of EBITDA and have a
prestigious ceremony where we are celebrating the SME champions who are building our nation brick by brick. The $5 trillion economy on the horizon PM onwards.
For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat.
Welcome back. You're still tuned into Halftime. Select pockets doing really well, and we do have earnings which are coming in thick and fast, leading to those reactions on individuals' names as well. But we have to take another break. On the other side, Manisha Gupta will joining with Keith Tan, Associate Director, Asia Metals Pricing of S&P Global. Stay tuned for that conversation.
Eight, innovation, research and development. And 9, next generation reforms. Natural farming. In the next 2 years, 1 crore farmers across, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First,
Welcome back, and joining us on the show now is Keith Tan. He's Associate Director, Asia Metals Pricing at S&P.
China, particularly in the rebar sector, and the rebar price would be a good indicator of where the construction sector is at. Prices in China have fallen to the lowest in 7 years recently, and this would be mainly because of some recent regulatory changes in terms of the specifications that new specifications, national standards have come into play, and traders are now rushing to clear off inventories of cargoes that were made using the older specifications. So again, I think people are now appealing to the government for more time to clear inventory. So there's now a 2-month period for when the new standards are expected to come into effect. In the meantime, I think this is again construction activity resumes. So I think we'll have to see where prices and how prices weather the coming month to decide whether.
Keith, what's your sense from here?
Declines,
from here, would you say you could see a decline of perhaps 1% and a gain of 2%? How would you look at the risk-reward ratio from these current levels?
That's going to be a tricky call to make. I think I might have, I think let's take a peek potentially at the raw materials, where we've seen, for a bit of a clue, right, where iron ore prices have actually fallen just yesterday for the first time below $100 since April. They're now at the $99.70 level. That's really, again, no surprises given that the steel demand in China has been weak for a while. The property developers.
This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised. Other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes, will be foregone, while revenue of about 30,000 crore rupees. Our government, through the accelerated irrigation benefit program and other sources, will provide financial support for projects with estimated cost of projects.
Stocks build on gains with metals, telecom and IT being the prominent drivers today, even as financials are the key drag. Midcaps fare better.
The draft performance and a good start on the company's new strategy as investors turn skittish on valuations after the recent rally.
Over the last few days, and case in point being the union budget, and all of it 24,730 levels or areas with which investors play with the economy and take a bet on the overall economy.
Banks indeed are the underperformers in today's session. Just this morning we asked this question. The dips all through the week were getting bought into, but do the bulls have a conviction to take the Nifty back to those levels which we saw last Friday? Yes. I guess the answer is a resounding yes, if you can see from the screen. But what's leading the gains there? It's the IT pack that is leading the gains, both Infosys and TCS being contributors to the upside. Then Infosys is now at a 2-year.
What banks are required to do by Reserve Bank is that they have to estimate how much deposits will flow. Means the banks are having less of immediate liquidity or more demands on their cash and deposits. People who are inclined to use pay from their savings account more often, they had to keep 10% of that in the form of liquid cash or government bonds. Now they have to keep 15%. Likewise, now term deposits are what bankers like very much because you won't liquefy them. For that, you don't have to keep LCR. But if the term deposits have been used by some small unit as collateral to borrow, then those will have to be treated as retail deposits and you have to keep the same 10 or 15% as government bonds as a percentage of those deposits. Now, besides all these rules, the valuation of bonds also has been tightened a bit. Have to increase the amount of government bonds by 10 to 15 basis points. It will mean nearly a 5 lakh crore demand for bonds. Okay, some of them already have extra bonds. You bring it down to 2.5 lakh crore. Still an extra demand of,
on a regular basis on online through UPI. So that's a very big difference, and therefore many changes in the rules as well. To discuss the impact from RBI's draft norms on liquidity coverage ratio, we spoke to Satyanarayan Raju, who's the MD and CEO of Canara Bank. Listen in.
Our liquidity is for existing. We are very much comfortable. We are at the range of 135 to 140. That's the existing liquidity what we are maintaining it. What the guidelines yesterday our regulator has issued, we have assessed roughly in the morning, and it is impacting 10 to 11 basis points. I don't think that will have a problem for the Canara Bank, because even after doing all these things also we will be more than 120-125%. So I don't think it impacts our credit growth or CD ratio or anything.
Well, from banks we move to a big deal in the pharma space, and Mankind Pharma will acquire Bharat Serums and Vaccines from Advent International. Rachna Dhanrajani, who had first reported on this deal on the 14th of May this year, is joining in with the details. Rachna, tell us more.
Right, it was on May 14th that we first reported that Mankind will buy 100% stake in Bharat Serums and Vaccine from Advent International. And now the announcement has come in from the company. In fact, it came around late last evening. Now the deal value of this transaction is pegged at around 13,600 crore. But there are two things that we're closely looking at. One is a question that how is Mankind Pharma planning to fund this acquisition of Bharat Serum and Vaccine? So we've learned from our sources that it's going to be a split of debt and equity. Now let's go back to our report on May 14th, after which the company had announced that they will be doing a fundraise for 7,500 crore rupees of equity, and now our sources have confirmed that the same equity will now be used for this deal and the remaining will be for debt. Another thing that we're closely looking out for is the integration. Now of course Bharat Serum and Vaccine has been a market leader when it comes to women, critical healthcare for women and fertility drugs, and now Mankind will be stepping up with this integration. So that's something that we'll be closely looking out for, as well as the street will.
All right. Thanks so much, Rachna, for all those details, and many congratulations on the news break. With that, we'll slip into a short breather on Business Lunch. But when we return, we'll get you excerpts from the Finance Minister's conversation from the open house today. Stay tuned for that.
Assam Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management.
Back with us here on Business Lunch, and now days after presenting the Union Budget, Finance Minister Nirmala Sitharaman said that taxes have not been increased because the government wants more money, but to ensure that all asset classes are treated similarly. Now, speaking at the Budget Open House organized by the RP Sanjeev Goenka Group in partnership with CNBC-TV18, she also justified the government's decision to remove indexation benefits for real estate. Listen to what she had to say.
At least I can tell you under Prime Minister Modi, nothing is done just with the back of the envelope calculations. We go through rigorously. We talk with people who are concerned in this areas, and only then, not for revenue considerations, I underline that, more for ease of doing business, more for simplification, more for rationalization, have we brought changes in the tax. It's not been increased because I want more money. And it's not been increased for everything. Every asset class has to be treated similarly and nothing more. We'd like to be sure that the public spending actually does the job of bringing public infrastructure and bettering it as well. So it is not a temporary solution that we thought is required post-COVID. India still has infrastructure debt to say, can I shut that shop? No. So, of course, that doesn't mean we'll keep doing it and we'll not have a view on private sector investment. We will want that to be ramped up, there's no doubt.
All right, some important comments coming in from Finance Minister Nirmala Sitharaman. And with that, we'll slip into a short breather on the show. But when we return, we'll get you more updates on news developments as well as market action. Stay tuned to Business Lunch.
And related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor.
Welcome back. You're watching Business Lunch. Now, the state of Karnataka passed a Cine and Cultural Welfares Bill, levying a 2% cess on all TV channels and OTT platforms. Now, the cess also seeps into cinema ticket sales and any entertainment revenue generated within the state. That's a big one for media and entertainment. Ashmit Kumar joins in with more details on this new cess. Tell us, Ashmit, who stands impacted and the move by the government or at the state government, as well as the feedback?
Well, the intentions of the Karnataka government appear to be very noble, to set up a welfare fund to address the needs and provide social security cover for cine and cultural activists. The way they've gone about it, however, has raised many questions. By way of this bill, it was passed by the lower house of the Karnataka Assembly on Tuesday. Last evening, it was passed by the upper house. Now it is awaiting the assent of the governor for it to become a formal act. But what it seeks to do is to levy what it calls is a welfare cess. Now, this welfare cess will be levied on movie tickets, on multiplexes, on TV channels, and importantly, OTT platforms. Now, cinema and multiplex, one can understand, but the question of TV channels and OTT platforms is what has raised many eyebrows. Number one, the question that has been raised is that, is this really the remit of the state government? Does it have the legislative competency to levy a tax on an issue that is already seeing the levy of GST? This, in fact, we spoke to some of the industry leaders as well. What they also tell us, they're raising the question of double taxation. Is this a case of a double taxation? Since GST is already being paid on any subscription amount that may be being paid to an OTT platform or a TV channel, is this a case then of double taxation? There is also the question of how do you designate or attribute a revenue, a portion of the revenue, to a specific geography. These are many questions being raised, especially now that the Karnataka government, the Karnataka Assembly importantly, has passed this bill. Welfare cess of 2%. Representations importantly are already going to the leadership at the state government level as well as to the governor.
Ashmit, thanks a lot for that update. Time for a short break, but as we do that, today India is marking the 25th anniversary of the Kargil War victory. 25 years ago on this day, the Indian Army won the Kargil War, reclaiming territories in the districts infiltrated by the Pakistani Army. Now, every year, the Army pays tribute to the Jawans who lost their lives defending the country. Prime Minister Modi also visited the Kargil War Memorial in Dras today and paid his tributes to India's brave heroes. He said that India has defeated terror in Kargil and that the Army will continue to fight terrorism.
Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits.
Welcome back onto the world of sports. Then the biggest sporting extravaganza, the Olympics, begin today in Paris with an opening ceremony by the river Seine. A total of 117 Indians are participating in the games ahead of the opening ceremony. Mangalam Malu spoke with one of the biggest benefactors of the Indian sporting community, Parth Jindal, the founder of Inspire Institute of Sport, and asked him about India's aspirations from Paris 2024. Listen in.
Very difficult to predict medals.
Yes,
obviously, it goes on to, they have to qualify, then they go into the Olympics. There's a lot of pressure. But I think never before has Team India been so well prepared. I think the government has put a tremendous amount of impetus, and there's been a lot of collaboration between the private sector and the government in preparing this contingent. So whether it is the Sports Authority of India, whether it's the Target Olympic Podium Scheme, whether it's the Indian Olympic Association and the Sports Ministry, I think everyone has worked collectively to give our Indian athletes the best chance. I think, you know, Tokyo we won 7 medals and our shooters didn't get a single medal.
Yes.
This is going to be our largest ever contingent of shooters going to any Olympic Games. 21 shooters are going. We also have a very strong archery team going. Again, archery didn't bring back any medals in Tokyo. So I'm optimistic. I think double digits, I wouldn't settle for anything less than double digits. My own count is about 12. 12 to 15 is where I would be thrilled if India gets to, but anything less than double digits, I would be disappointed.
All right, and since you are very closely associated with all sort of sports, more so with, you know, the quest for gold in Olympics, etc., can I pin you down for hopes of the yellow medal this time around? I mean, last time we did 1. How many this time?
So again, it's very difficult
yes.
to predict, but Neeraj goes in as the favorite.
Yes.
There's no doubt about that. Then we have a chance in boxing as well with Nikhat Zareen.
Yes.
She has a shot at a gold. In my book, Vinesh Fogart is another one who is, although the Japanese are extremely strong, but we would be expecting Vinesh to put up a very strong fight for a gold. And shooting, I mean, shooting, we have world champions, we have world record holders going. So I don't know, let's see, but I hope it's more than one.
All right, so interesting conversation there, and cheering for our brigade for the Olympics this time. And as we end this edition of Business Lunch, here's a special announcement for all our viewers about an exceptional evening where we are honoring the heroes of India's economy, a prestigious ceremony where we are celebrating the SME champions who are building our nation brick by brick. By the $5 trillion economy on the horizon, we must acknowledge the heroes are small and medium enterprises. India's one of the coveted SME Awards platforms is here to recognize, honor and celebrate the builders of India's economy. HSBC presents CNBC-TV18 SME Champion Awards is all set to finally announce the winners today, 5:30 p.m. onwards. Don't miss it. Thanks so much.
Bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. As always, for the markets, it's a stellar first day of the new series. The midcaps are powering through, so a lot to track on the show as well, Vivek.
A lot to track on the show, and what a stellar rally it's been, especially in the broader end of the markets. Quite a lot lined up on the show. Let's start off with the top headlines. Stocks build on the gains. Metal, healthcare and IT lead the rally. Private banks, FMCGs, midcaps fare better.
Emphasis gains after reporting Q1 numbers. EBIT margin surges sequentially while revenue growth is weak. Management tells CNBC-TV18 that they will deliver above industry growth in FY25. Sand is under pressure after revenue dips 10% in the first quarter. The company has also lowered revenue guidance for FY25, which brokerages such as Kotak and Nuvama believe will be challenging to meet.
Biocon gains in trade as sources suggest that the company is likely to raise 4,000 crore rupees via a QIP route. Proceeds may be used to pay debt, and the QIP could be launched as early as next month. Stock up over 3%.
Draft RBI rules propose banks to sharply increase liquidity coverage and deposits from next April. Bond yields fall to multi-year lows and expected higher demand for bonds from banks to maintain liquidity cover. Federal Bank shares down nearly 4%.
Industar gained sharply in trade as the board is set to consider a proposal to buy back shares in its meeting next week.
Okay, all right, those are the top headlines. The Nifty up almost 400 points right now. All the sectoral indices, they are in the green. We have the mid-caps, which are powering through. And at every tick, we are seeing an uptick, actually. There's no letdown from those levels. The Bank Nifty, though underperforming today, is still in the green. 0.6%, that's what we are calling underperformance in a market like this. But, of course, it has recovered from the red levels that we saw earlier. Metals, IT, autos, you name it, and all of these names are doing well. And a very sector-specific or even stock-specific for that matter, earnings, news updates, they keep coming in.
Earnings, news updates, regulatory changes, all of them are coming. It's a very action-packed day. In fact, the start of the day, it appeared as though the Bank Nifty would drag significantly, but that's not been the case. We also have results. Shriram Finance is up almost 5.5% after it's just reported its numbers. But we will focus on the mid-cap stocks now. We have Hormaz at the wall, who's taking us through all of the mid-caps that are moving around in the session.
Friday cheer, if you would like to call that. Everybody wants to have a bit of a relief after the week that we have had on a Friday, and the benchmarks, the broader markets, all of them doing very well today. Start off with some of the gainers then in the broader markets, and SJVN is leading that pack. At one point was up almost 11 to 12%, but then that stock has now cooled off slightly from the day's high, but still 7.5% higher after that mega order win. Piramal Enterprises is having a good day, 6.5% higher there, and Ashok Leyland, after the upgrade that came in from UBS this morning after the results, 6% higher among the top gainers on the auto index. Now, insurance stocks, all of them doing well today. Pick any and you would find them trading with gains. New India Assurance, GIC, both of them seeing double-digit gains today. LIC also now at a record high, nearing levels of 1200. It's up only 2%, but a record high nonetheless. Earnings reactions continue, and they are on both sides of the spectrum. Emphasis is up almost 7.5%. Scient, as you highlighted in the headline as well, not having a
sense of how much did cracks fall in Q1 across products, and have you seen a recovery now in Q2 in terms of GRMs and refining margins?
Good afternoon, and thank you very much for having me here. It's really a pleasure to be talking to you about the performance of CPCL. We are very proud to be declaring that we have done very well in the Q1. And we have done extremely well on the operating side, and we have breached many records in the Q1 performance. But coming down to the cracks that you were mentioning, I think if we look at our overall product portfolio, almost about 45% is dependent on the diesel. So diesel cracks were roughly hovering around $10 per barrel. So we had a little bit of the issues on this, but looking at the overall scenario of how the cracks have been moving as compared to previous quarters and previous years, I think with the kind of performance that we have had, our operating performance has really given us the good result that we really got this quarter.
Looking in Q2, what is it that you anticipate for the rest of the year?
Okay, GRMs, if you look at the overall scenario, looking forward to the performance, I think if you look at our...
Okay, so, yes, your margins are better than Singapore GRMs. What are Singapore GRMs trading at right now, Mr. Shankar? Have we seen an improvement? And is there an indication that FY25 will continue to be at these levels, considering that a lot of refining capacity is coming out overall globally as well?
Yeah, Singapore GRM has marginally improved if you that. So looking forward, we are very bullish on this matter, and we expect that looking forward, I think it's too early now to predict how the financial year will pan out because the cracks have been extremely volatile over the last couple of periods. But we are trying to optimize our operating areas so that we can actually do much better on the marginally improving on the Singapore GRM. So we are looking at basically moving towards the operational excellence. That is what our mantra is.
Okay, so Mr. Shankar, you strive to go and, report margins above what the Singapore GRMs are. We got that. Now we want to talk to you about, the JV that you have with IOCL. We understand that IOCL is the majority partner over there. We also understand that from the initial capex that you had envisaged, there has been a cost escalation. So when can we expect the Kaveri Basin refinery to come on stream and also give us a...
By adding volumes to the refining in the refining sector. And IOCL and CPCL as a JV 75 and 25 by CPCL, we have moved into the CBRPL space. And CBRPL is a very strategically located installation. And I believe that we are now moving towards the final closing out of the necessary statutory approvals. But needless to say, we have also done enough amount of engineering on the project so that as soon as we get the clearances, we should be able to move forward and award this contract. Pre-engineering activities that we have already started. So I think looking at it, roughly 39 months is what we are starting the commissioning aspect. Because a refinery of that magnitude cannot be commissioned at one go. So it has to be periodically, like it has to be ramped up starting from the basic crude units to moving towards the secondary units and moving towards the petrochemical requirements. Also, it's a gradual process. So starting from 39 months, we should be able to begin the commissioning aspect of the refinery. And we are very, very optimistic to it. Yes.
No, yes, of course, that's a huge capacity that you're coming with. What would that do to your debt, Mr. Shankar? Now there has been a cost escalation. What's the absolute debt right now? Your net debt to equity has gone up 2.49 times right now. What is the level that you're comfortable with?
No, actually, we have entered into that project on a debt equity of 2:1. So I think with the current condition that the company is going through on the financials, I think it is a matter of only time that we will be able to sail through on the managing the financials also. Because you must have read from our other portfolio that we are also looking at some other projects at CPCL Manali so that we can de-risk our other businesses and move towards other areas. So we are looking at the kind of, we are comfortable on the financials. That's the reason why we are also looking at major projects coming up in Manali side also, in addition to what we are planning in Nagapattinam.
Thank you. Thank you so much for your time, Mr. Shankar. It was a pleasure having you and, thank you for sharing your thoughts. Let's now slip into a short break. The management of Thangamayil Jewellery joins us next to discuss the Q1 numbers and the way forward. Stay tuned.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Welcome back to Midcap Radar. Thangamayil Jewellery is the next management on the show. The company saw a sharp jump as far as the revenue was concerned, almost 27.3% higher. However, the margin contracted on a year-on-year basis. Do wrote the company actually declared the highest ever Akshaya Tritiya sales in 2024. We are joined by S.M. Lakshmanan, the Vice President of Finance and Accounts at Thangamayil Jewellery. Good afternoon, Mr. Lakshman. Thank you so much for joining us. First up, before we delve into the Q1 numbers, we want a quick comment from you in terms of, how exactly will you be impacted by the budget announcements as far as gold jewelry is concerned, and what is the kind of inventory hit you may have to take on the back of this particular development?
Good afternoon, Vivek. Thank you for the opportunity given. The 9% duty reduction is actually a welcome move for the industry. It is expected to increase the gold demand and the gold sales further. It's going to be a great relief for the consumers. And as far as the company's profitability is concerned, yes, we have mentioned in our results very clearly, quantified the amount that due to the under-realization of inventory price and the making charges, there could be an impact of 29 crore rupees in the subsequent quarters as and when the actual sales takes place. Anyhow, it will be able to be made up by good amount of further increased sales in terms of gold. Okay, I have tried to answer the question which you posed. Let me talk about the first quarter of this financial year. It has started on a very strong note for Thangamayil Jewellery Limited. Highest ever quarterly turnover in the company's history, 1,220 crore rupees. As Vivek just said, it's a robust 27% year-on-year revenue growth.
Yes.
Akshaya Tritiya during the quarter, which fell in the first week of May, company had a whopping 45% year-on-year revenue growth, 24.5% gold sales volume growth on Akshaya Tritiya day. Okay. In terms of the first quarter sales volume, gold has increased by 9%. High
yes,
Mr.
Yes, Mr. Lakshmanan, yes, that is something that you've given in your presentation, and we have been flashing that as graphics as well. But you want to understand more about the outlook. One, you said that 29 crore will be the inventory write-down in Q2, which of course will be taken care of by the volume increase that you see because of gold prices going down. Does this calculation include the tax already paid as well? Just wanted to clarify that. And in FY25, what is the outlook going forward? The 29% growth that you saw in Q1, will you do better than that in the rest of the year?
Yeah, we have mentioned in our results that it is going to be in the subsequent quarters. So the impact need not be in Q2 exactly. It will be in the subsequent quarters as and when the sales takes place. And as far as the remaining quarters of the concern, the first quarter's tempo is going to be maintained by the company in terms of top line performance. The reasons are the monsoon is expected to be above normal. That is what the forecast says. The first point. Second one is the remaining quarters of this financial year, Q2, Q3, Q4 are going to be busy with festivals and wedding activities. For example, August first week is going to start with Adi Utsav. Adi Utsav is a Tamil Nadu water bodies based festival. It's going to have a grand sale. Q3 we are going to have the national celebrations, Diwali, Dhanteras, and in Q4 Magara Shankranti, Thanksgiving year-end offers, and Basant Panchami. So the company is expected or confident of maintaining the first quarter's top line performance in the remaining 3 quarters also.
Mr. Lakshmanan, would you be able to quantify that? First quarter, top line grew by close to 30%. So FY25 on the base of FY24, also taking into account, the kind of hedging one-time hit you will have to take. Could you give us a guidance for top line growth, the EBITDA margin, and what will be the bottom line growth that you expect to see on the base of FY24?
Yeah, first quarter we have done 27%. I am confident that the company will be able to maintain that 27% top line guidance, and 1,220 crore which we have made in the first quarter, we will be able to achieve with this, for 4x for the financial year 24-25.
Okay. All right, Mr. Lakshmanan, we would have loved to chat a lot more, but we are completely out of time and we do have to take a quick commercial break. But that's the word coming in from Thangamayil Jewellery, sounding very confident on the FY25 roadmap as well. Before we take a break, a special announcement for all our viewers about an exceptional evening where we are honoring the heroes of India's economy. Prestigious ceremony where we are celebrating the SME champions who are building our nation brick by brick. With the $5 trillion economy on the horizon, we must acknowledge the heroes, our small and medium enterprises. India's one of the coveted SME award platform is here to recognize, honor and celebrate the builders of India's economy. HSBC presents CNBC-TV18 SME Champion Awards is all set to finally announce the winners today at 5:30 p.m. onwards.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Okay, it's a stellar rally, 400 points higher on the Nifty right now, very, very close to that 25,000 mark, just 200 points away. It is also led by the gains that we are seeing in the metal index. So Nifty Metals is up around 2% right now. A lot of broader market movers that we have. The Midcap index, that one is up around 2%. We have something like an Ashok Leyland, which is up 6%. We have Tata Power, which is up 5%. So IT has made a comeback, as we have been talking about it, 4% higher. So the entire IT pack in the mid-cap space as well is doing really well today. So that is what the market action is looking like right now. But with that, we'll do one thing. We'll take your leave on this edition of Mid-Cap Radar. Your stocks when we return.
Well, in many respects, this is a landmark judgment. It was pronounced by a 9-judge bench. It's coming after 9,000 days of waiting. This first case was filed way back in 1999. What is the issue at the heart of it all? Well, the core issue that was being argued here before the apex court is that can the state governments prescribe a cess by their own legislative competency? Can a state government pass a law saying that, or basis the mineral output, a certain percentage has to be paid in the form of cess or tax? The answer is yes. An affirmative answer coming in from the apex court, the Supreme Court saying that yes, indeed, the states do have the legislative competency to go ahead and to pass such laws which provide for paying of cess. This is a burden that will fall on the miners. In terms of the impact, there are 4 aspects to consider. Number one, the impact on the miners themselves. There was a big question mark over payment of these cess, payment of these levies, of this tax to state governments. That has been answered. So that squarely falls on the shoulders of the miners. The Supreme Court has said that basis the mineral output, the state government can compute a cess that has to be paid by them. So a huge impact as far as miners are concerned. Speaking of the miners, who are the miners that were here before the apex court? The likes of Hindalco, Tata Steel, Ambuja Cement, ACC, all the big names were here contesting this state levy. That answer they've met with a disappointing answer from the apex court. That burden will now fall on the miners. In terms of the impact also on the state governments, let's bear in mind that mineral bearing states, the likes of Odisha, Karnataka, Maharashtra, Rajasthan, Jharkhand, Chhattisgarh, MP, these are the larger states which bear these mines. These states are looking at thousands of crores of revenue coming in over the course of a mining lease. That's 2. Second, as far as the impact on the centre is concerned, this is a huge hit for the centre as well. The centre, bear in mind, has been arguing before the apex court that this power of taxation falls exclusively in the domain of the centre, that the states have no business levying this tax. They've been met with a disappointing answer as well. The centre's petition being disposed of by the apex court. So again, a big landmark judgment coming in from the apex court in terms of miners, pain coming in for them in the form of additional cess by way of state governments.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm, as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say, this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Bajra. Well, it's turning out to be a session where we are seeing a good amount of gains coming in for the market. So we have the Nifty, which is up around 383 odd points at this point in time, high point of the day. No complaints coming in for the mid-caps either, which have rallied around 1.7% at this point in time. And the Sensex, which is up a cool 1100 odd points. The Bank Nifty also has recovered from the day's lows. So currently the Bank Nifty's at the high point, up around 0.7% currently for the Bank Nifty. Doing well for the markets, quite contrary to how we started, because we had the Bank Nifty which was underperforming. So there's been a complete reversal which has taken place, and we've really built on gains in today's trading session. The advance decline ratio holding steadily on the advancing side. So around 2,700 stocks advancing to around 1,300 stocks declining on the Bombay Stock Exchange. Well, joining us this afternoon, we have Shaina Mukaddam, who's an independent market expert, Vaishali Parekh, head of tech research at Prabhudas Leeladhar, to answer all of your stock queries. Ladies, welcome to the show. Vaishali, if we could just kick off the show with a technical check from you. Good, going great guns for the market at this point in time. What's your sense? How would your approach be?
Very good afternoon, ladies. Yes, so market, once again, it's a treat. We are seeing a good upsurge and, very close to the previous high of 24,850. So let's see if we move past that decisively, we can expect a target of 25,000 levels. And as far as Bank Nifty is concerned, well, it has been underperforming, but now it's trying to get into momentum. So I would say that 50,200 would act as a support, and for a near-term basis, 50,600 would act as a support. And let's see, we may see a bounce to start with for 51,500. So that's how market is very buoyant, and we are seeing good participation coming from IT. IT is outperforming as compared to Bank Nifty.
Okay, all right. Well, let's get in some queries now. We have Ellen Ratan Parekh, who writes to us from Hyderabad. He holds 400 shares of Trent, which he's bought at around 1,023, 100 shares of Hitachi Energy, which he's bought at around 6,960, and 40 shares of Abbott India, which he's bought at around 3,440. Wants to know what the future prospects of all of his investments are. So it's a medley of stocks, Trent, Hitachi, and Abbott. Well, let's go over to you, Shaina, on this one. What would your view be on three of these counters?
All three are very high quality, good quality management stocks. They are a bit expensive at current levels, but have good potential over the medium to longer term. So what I would suggest is that you can hold, but it is always, advisable to hold with a stop loss for these stocks. Trend, as we've seen, the stock has rallied substantially, but this was on back of very good margin improvement that they had. And we've seen also the profits that have actually doubled. Valuations can, a bit stretched, as I mentioned, but you can hold with a deep stop loss. I think the potential for growth definitely lies over there in terms of, a healthy, they have a robust increase additions in terms of footfalls. So that should be a positive going forward. Also, they have a good scale up with their Zudio and Star format. So I think these are positives going forward. Hitachi Energy, after their acquisition of ABB, they took over the power assets of ABB, the grid business. After that, the stock has actually, started performing in terms of operational performance. We saw the last quarter and also going forward. They have got very good orders. They are expanding. They've got orders even from Australia. So I think all this should support a good business momentum. So I think even Hitachi, there again, valuations are expensive. But if you're a medium to longer term holder, I think the power sector, especially in renewables, is getting a lot of orders, especially Hitachi Energy. So it would be a hold with stop loss. And of course, Abbott, Abbott is a steady growth pharmaceutical MNC. So I mean, there is nothing substantially happening there. It's a steady growth, low double-digit growth in revenues. Dividends are good. The management has declared that they would be sharing more than 70% of their profits as dividends. At the same time, this is more expensive than the rest of the pharma stocks. You can continue to hold if you're a long-term investor. Hold it, keep a stop loss.
Okay, all right. That's on a couple of these stocks. And what about you, What would your view be on the technicals, Vaishali, on 3 of these counters?
Sure. So let's start with trend. Well, we have seen a good run up, and just a few days back, we have witnessed some profit booking coming in. So still there is no damage to the trend, but if 5,000 levels break on a near-term basis, then this could call for a further corrective move going towards 4,800 to 4,600. Till then, 5,000 should be regarded as a strong support level. And well, if he wants to book partial profit and wait for a little bit of a dip to re-enter, that can be a strategy, or hold it with a trading stop loss. The other one you were asking me about is Hitachi. So I think Hitachi Energy, well, that too is in a similar chartical formation. It has just recently made a high of 14,000, nearly 200 levels, and right now it is at one of the previous support levels of 10,900. From there on, we are seeing a bounce coming in. So final support should be 10,900. If these levels break, it could call for a further profit booking in this as well. So I would say continue holding with a stock below 10,900 would negate my view. The third one you are asking me about is?
Well, there was Trent Abbott as well as Hitachi. So Abbott.
Yes, so Abbott, I think overall this stock has been doing very well, and right now also it's in a rounding formation. I think this stock is ready for still further up move. If this person wants to add also, 2,700 acts as the near-term support. So if there is a dip, he may add more, but otherwise hold on for the first target of 29,500 to start with. And if it sustains above that, I won't be surprised there's going to further high of around 30,200, 30,300 or something like that.
Okay, all right. Well, we have Sanjay now, who writes to us from Bhubaneswar. He holds 3,000 shares of Bank of Maharashtra, which he's bought at around 43.18 odd rupees. So he's sitting on a profit on that one, and he wants to know what to do, whether he should hold or add more shares when it comes to Bank of Maharashtra. Well, it's still a while away from, just a couple of rupees away from its 52-week high, but it's rallied significantly, Vaishali, Bank of Maharashtra, all the way from levels of around 33 odd, which was its 52-week low, to its high of around 73.5. So technically, how does the stock look? What would your target price be, and stop loss as well?
So I would say the way banking stocks have now once again started showing some strength, I would say, well, I don't think that this is calling for any exhaustion. And even in the recent past, if you see this, Bank of Maharashtra has been into a long consolidation between 63 to 66 levels. So right now it looks quite promising. 63 should be the stop loss. And well, if we see further momentum coming in all these banking stocks, I think this near-term target can be expected of 72 levels. And well, if time is not the problem and one wants to hold even more, then I guess wait for 78 and higher targets. That's how I would look at it. But if you're a short-term trader, 63 below 63 would be a stop loss.
Okay, below 53 would be a stop loss for Bank of Maharashtra. Fundamentally, Shaina, your view?
Well, I would say, in terms of equity, the government holds 86% of the equity. And to bring this down, the bank has already sort of indicated that there would be a QIP of almost, I believe, some 5,000 crores. Given this fact, and the fact that the stock has run up a lot, valuations are not cheap in terms of price to book. What I believe is that there is likely to be some consolidation, at least till this flow is out of the way. So if one is looking to be invested for the shorter term or medium term in the banking sector, there are better stocks available in the private sector which are available at similar valuations. Even PSU, even SBI is cheaper. So I think it makes a good switch from here. If you're a long-term investor, of course, I think most of the banks are going to do better because of better quality of balance sheets.
Okay, all right. That's on Bank of Maharashtra. That stock doing well today. Well, we now have a query coming in from Gopinath, who writes to us from Kerala, holds 81 shares of Laurus Labs, which he's bought at around 506 odd rupees. And he wants to know the prospects of his holding. Well, Shaina, I'm going to come to you on this because Laurus Labs, it's been an interesting stock. Okay, Shaina, we'll probably try and get back to her. But Vaishali, Laurus Labs, technically, how does it look? Fundamentally, it's been quite resilient despite its numbers disappointing the street. It always manages to hold up in terms of its post-number reaction. So the stock is currently at around 447. What would your target be on that particular counter? Do you think that it has the ability to retest its 52-week high at around 484?
So, well, this is one such candle. Actually, it took a support of a 200-day moving average of 416. That's where the rally began. And we need a follow-up buying for this because this candle has been exceptionally too big. So if we see a further surge above 456 levels, then of course the next projected target does come to the previous high of 480. So that's how I would look at it. But on the whole, 415, 414 acts as a stop loss.
Okay, all right. Anything within the space that you would look at? You know, a stock such as Syngene also came out with its numbers, yes, just around this week, 2 days ago. What would your approach be technically for Syngene?
So I would say Syngene also has really run up very well. But having said that, I think there is still further upside. So purely on technical terms, I would say 807, 810 is the breakout level. That is the near-term resistance. If we just see the stock moving above 810, then it calls for a further upside of 850, 860 levels. So yes, Syngene, the chartical pattern looks quite convincing.
Okay, all right. So that stock is up around 17% in the past 6 odd months, looking convincing on the technicals. Haridas writes to us from Mumbai. He holds over 1100 odd shares of Rail Vikas Nigam, which he's bought at around 136.9 odd rupees. So he's sitting on a good profit there. He wants to know what to do, whether he should hold or sell at these current levels. Vaishali, I'm going to toss this over to you as well. Rail Vikas Nigam, you know, a lot of these PSU stocks have done extremely well. But do you think it's prudent to take some profit off the table now?
I would think so, because we've really enjoyed good profit. So I think partial profit booking should not be ruled out, because to my understanding, the way these stocks have run up, these stocks can take a breather to some profit booking.
Okay, all right. Anything within the space which you still technically like?
So I still like IRCTC. That has really not participated as compared to these other stocks. And today what we see from Texmaco Rail and Jupiter Wagons, they still seem to have some upside. So these stocks are okay to trade.
Okay. Shaina, would you have a view on Rail Vikas Nigam and also Laurus Labs?
Yeah, so Rail Vikas Nigam, I would say that, it's got very strong order book. So from here on, it's a hold, though while valuations are expensive, I believe going forward, while it could consolidate because of valuations.
Okay, well, we do have some issues with China's connection. We'll do one thing. We'll take a short break with the news that the markets are doing well. The Midcap index is up around 1.8%. We have the Nifty, which is doing well as well, up around 386 odd points. We'll take a quick break. Be back with more queries. Stay tuned.
Disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year.
Yeah.
That's what we expect to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
The French are getting the Olympics off to a really smart start. Just consider the usual, where you have an Olympic stadium and the host country sets up effects and sets the stadium up as a stage on which to exhibit its unique talents and its history, its culture, really the showpiece for what it wants to present to the world. And consider the difference here in Paris. All of central Paris is now the stage. The Olympics athletes, the contingents will not march through.
Welcome back. Well, a very good day for the markets. We have Divi's Labs, which is your top gain on the Nifty. That stock is up around 5% at this point. In fact, Vaishali, wanted your thoughts on that particular counter. It's doing extremely well technically today. So give us a sense in terms of what we can expect on the technicals of this one.
So I would say, of course, for a short-term period, it's really run up. So hard to tell whether it's a good buying opportunity. But when I'm seeing the weekly chart, I mean, after a good consolidation at 4,500 levels, this stock shows renewed strength. So I think, at the same time, 4,800 as a near-term target is the resistance. But if it sustains above that, then 5,200 would be the next possible target.
Okay, all right. Okay, well, let's get in a couple of questions now. We have Arun, who writes to us from Coimbatore, holds 500 shares of IREDA, which is bought at around 117. So sitting on a profit, he wants to know what to do, hold or book his profits. Now, similar question that we answered before with regards to railway, RVNL. On IREDA, what would you recommend, Vaishali, book your profits?
I would say partial profit booking should not be ruled out, or else keep a stop loss of 250, because below 250 it calls for a profit booking zone.
Okay, okay. All right. And Shaina, what would your view be?
Well, I would say that it is very expensive in its NBFC space for now. And I was a bit disappointed that, the renewable energy lending space did not get any benefits from the budget. So based on these two factors, I would say you could switch to a direct banking stock or, another NBFC. As of now, I believe for the shorter term, it is expensive.
Okay, all right. So it is in the shorter term, it is expensive. We do have Ashutosh, who now writes to us from Kolkata, holds 300 shares of Zomato, which is bought at around 68. So good entry price is what he's got for Zomato. Long-term investor wants to know what to do with this particular counter. Well, let's try tossing this over to you, Shaina, on this one. Zomato, the valuations definitely are something which has expanded quite a bit for Zomato. But how would you approach it fundamentally from here on? Do you have a target price on the fundamentals?
See, while the stock has moved up substantially and valuations have started, moving up. At the same time, if you see, even the EBITDA margins overall for the company have improved substantially in FY24. Now it's almost, this year will be expected to be above 8% on an EBITDA basis. Blinkit also actually is expanding fast, expanding across geographies. And maybe by the year end, we could see, profits improving even on EBITDA for Blinkit. So given all these factors, and if one wants to be in a new age business, I would think this is an interesting bet. Maybe, we can not look at valuations for the shorter term, medium term, but keep it as your long-term holding.
Okay, all right. Keep it as a long-term holding. Well, the one question is about the valuation of Blinkit in Zomato. But technically, Vaishali, what would you recommend on the technicals of Zomato? What is your target price? Where do you think one should probably keep their stop loss? And again, is this a stock on the technicals where one should book some profit?
So, well, I think the stock technically is showing some signs of exhaustion. So if you're ready to keep a stop loss of 200, that should be the stop loss for now. And ride the rally for another target of 250, 260. Else book partial profit. And if it comes down, add more to the stocks.
Okay, all right. Well, we have S. Jaykumar now, who writes to us from Tamil Nadu. He holds 1,000 shares of Mishra Dhatu Nigam, which he's bought at 536, wants to know what to do, whether to hold or sell this particular counter. So he's currently sitting on a bit of a loss. So Vaishali, what would your approach be on this?
So I would say actually continue holding, because overall this stock, there is no weakness. It's just a minor consolidation. So currently it's at 486, keep 460 as stop loss. And right now I'm seeing overall the full metal pack is showing some strength. So this too should do well, and look for a target of 540, 550.
Okay, all right. Look for a target of around 545 in that stock. And fundamentally, what would your call be, Shaina on Mishra Dhatu?
Yeah, I would agree. It's a hold. Basically, Mishra Dhatu is a supplier, very important supplier to the government for critical parts, components, special steels, alloys. For a lot of defense, you have space. A lot of demand is there, increasing demand. So while if you look at it in terms of numbers, it is not expensive, given that it's a very, a nice large PSU stock. So I would say there would be a consolidation maybe for some time, but it's definitely a hold for the medium to longer term. Business is improving going forward.
Okay, all right. Well, Ritu Sareen now writes to us from Raigarh. She says she wants to buy power stocks from short to medium term period and is asking if she can invest in Power Grid or NTPC. Well, Shaina, what would your approach be on this?
Yeah, power, the overall sector is very much in, the addition list for investors. And there, between the two that she's given, NTPC and Power Grid, I would prefer NTPC. Where, there's a lot of investments that is going on both in renewable energy as well as if you see thermal, you see there's a lot of investment that is going on, and we're going to likely to see a big capacity increase for NTPC over the medium to longer term. Valuation is not expensive. It's just about 1.8 times current year. So this could be an interesting add. And the other company I would prefer to be Tata Power. There I believe, again, a lot of investments is going on to renewable energy. Debt is now being brought down. So I think overall it looks like a decent bet. If you want to have two power stocks, these two look good for you.
Okay, all right. Well, Shaina as well as Vaishali, we're going to wrap it up on that note. Thank you very much for joining in and giving us all of your views, which have come in on the technicals as well as on the fundamentals. That's all the time that we have on this show. Do remember to email us your queries. We'll address them with our experts. Closing bell up next.
Will travel on boat along the river Seine right through the heart of Paris, a 6-kilometer long stage. Consider just how many people will watch this, about 500,000 expected, and that's a lot more than anything you can cram into a stadium. So for the first, at the first level, it really means participation, involvement of the local people and of French people and no doubt visitors in the opening ceremony. It's not just for the select few who can somehow manage entry into a stadium, but there's more to this than that. Consider that the Olympics is the biggest sporting event in the world. The number of people who watch it's going to be such a showcase, such a show-off for Paris to the world. All of Paris will be on show. The stage along the 6-kilometer ride along the River Seine is going to take in some of the most iconic landmarks of Paris, Notre Dame, the Louvre, and this is really going to be a presentation to the world. Consider also that Paris is perhaps the most visited city in the world. By some estimates, about 50 million visitors to Paris every year, spending about 30 billion euros just within Paris. So there's a lot of money in tourism for Paris, and this is only going to multiply the viewing and invite more tourists. It makes show sense and it makes money sense. And to that extent, France and Paris particularly are already a winner.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies. I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed.
The Taiwanese index, that one is seeing a big cut right now, down 3.5%. But the Hang Seng, it is managing to be in the green.
Company has bounced back to growth.
How will Mankind Pharma fund this deal?
I call this the continued unwinding of consensus trades.
So we have gained market share in LCV by about 1.1%.
Okay, 30 points higher on the Nifty. So that's a start for you.
If anything, at best, the market drifts lower and consolidates.
Is there any consideration at all at this point in time to look at a possible review as far as indexation is concerned?
A revenue of 2,000 to 2,400 crores could be a possibility on FY 25-26.
The march higher on the Nifty continues. We've crossed 24,600.
Liquidity coverage rule is banks have to make an assessment that over the next 30 days how much money will be withdrawn.
They're raising the question of double taxation.
The Nifty up almost 400 points right now.
Well, that is the day so far, and it's essentially a terrific day once again. What a way to wrap up the week this Friday. Once again, it was not as if the global markets were looking good. If anything, they were actually a little lower last night. It's not as if Asia is going gangbusters or Europe is doing very well, but the market here is up 1.5%. We're coming to you from the CNBC-TV18 Moti Rosewell studios. This is the last hour on Closing Bell. I'm Prashant. With me, my colleagues Reema, Surabhi and Nigel from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. And look at the way the large caps have caught up in the second half of the trading session. The first half, it was all about, the mid-caps outperforming. And now both the Nifty and the mid-caps are up about 1.5, 1.7%.
I'll use the term that I use in trading hour. Invincible. It's almost as if this market wants you to believe that it is invincible. Throw tax hikes at it, throw wobbly global markets, throw a NASDAQ sell-off, throw whatever you want. But it's marching away. And guys, the day's high is 24,818, 35 points away from a fresh all-time high in what has been such a big week. Nigel.
Well, that's right. It's like that fast bowler coming in running, bowling those Yorkers, bowling those short pitch deliveries, and the batsman is just smacking him to all ends of the park.
Hitting it out of the park.
All ends of the park. Anything you throw at the market. So that's the kind of resilience you're seeing. And it appears the batsman, which is Nifty, is in perfect form. It just needs some kind of support from the other end, which is the Nifty Bank. That guy gets into his own as well. We'll be up and running, and maybe, in fact, we'll put on even more weight from here on.
That's a great analogy, Nigel. That ball for the batsman is looking like a football, right? It's like a cricket ball. It's like a football. So whacking it out of the park all over. Well, that's essentially what is going on, right? And I think it's just incredible. What can one say? Institutional investor after institutional investor that we speak with here on the channel, they all say that, money is coming in, but we are short of ideas. And that is the reality. You speak to, people all across the institutional spectrum, and they all say it's very, very hard to come up with ideas, yet you have what you have on your screen. So market India continues to outperform global markets. That is absolutely the point number one. It's a big 1.5% move. It's not a small move by any yardstick. And I counted 4 sectoral indices which are up over 2%. So, in the morning as it started, it was IT, but then now there is FMCG, there is, I think, autos, healthcare. So 4 sectoral indices. And I think a 5th one is joining in as well with gains of about 2% or more. Mid-caps and small caps are, I think, up about 1%. Mid-cap index is up nearly 2%. So very vibrant screen out there as well.
Well, the week-to-date tally stands at 1% now for the Nifty, and for the mid-cap index, it stands at 3.2%. And some of the big winners, Shriram Finance posts numbers. We'll talk more about it. 10% gain. Look at the way the stock is reacting to that. Pharma's come back. So Divi's Laboratory, Apollo Hospitals, catch your attention with a near 5% gain. IT is coming for buying. So Wipro's higher. Even Tech Mahindra, which was under pressure at the beginning of the trading session, is now back in the green. So IT, metals, all these sectors have come in for buying. And then not to forget, mid-cap action like a Paytm, for instance.
Yeah,
that's up 10%.
Obviously news-driven. We'll talk about that because of this license that they seem to have gotten. But yeah, Shriram Finance's move is absolutely breathtaking. 10%. Paytm, of course, on circuit because of reasons. But even beyond in the mid-cap market, look at names. Ashok Leyland was a very sort of quiet reaction to the numbers when numbers came in earlier in the week. But now there's flair, there's excitement, 6% up on that stock. Look at something like Amara Raja, 7-8% higher. Vesuvius is reacting to numbers. Network 18, of course, the usual caveats apply. It's the company that's operating and owning the channel that you're watching. Just a sense of the kind of excitement in the mid-cap market that's very, very evident. SJVN on that big order win that they announced. Lots and lots of names on the upside today. And insurance, obviously, has been probably the biggest sector and among the best sectors of the week. And all kinds of insurance names are still very much flying around. GIC, even the reinsurer, is up 15% as we speak. So, Nigel, it's just up and away.
Well, it's that sort of a day when the market wants to look at positives. Look at Ramco Cement, case in point. The stock is up 7.5% from the low point of the day. On another day, you could find plenty of, problems with those numbers. There is a problem because of higher amount of, competition in South India as well. You could argue the stock is not weak. But today, the market wants to look at positives, and that's why Ramco is up. Or take a look at the commodity basket, the metal index. That's popped up in trade for the last series. That was one of the biggest losers. The index itself was down 6%. But today you have that index as well that's participating, because now the street believes that maybe in fact prices have fallen enough. And below this, if they fall, then many smelters, many refiners will not make too much of money. So that explains why, in fact, today we're having market men looking at the positives rather than negatives, explains why we're up 400 points in a single trading session. And by the way, the Nifty Bank is now up close to around 750 points from the low point of the day. So pull up the intraday chart out there. You'll see it went down to around the 50,500 mark, which we have been highlighting for the last few days. And now it's up and about at the high point of the day. Beautiful move on the Nifty Bank. Sachidanand Utekar joins us on the show. Hi, Sachi. Good afternoon. Good to see you, Ben. Few hours or an hour before we get into the weekend. Your comment first on today's trading session. Would you trail your stop loss? Where do you think the Nifty is going from here? And also on the Nifty Bank.
Good afternoon, Nigel. Clearly, I think the level of 24,000 was well defended on the event day. And even yesterday, we saw, Nifty starting on a very negative note, but eventually the closing was very healthy. If you look at today's data points, clearly it states that 24,500 is the next immediate support or a higher support that has been established. And on the higher side, with the Nifty Bank, performing from here on, we expect that the Nifty would scale easily above that 24,860 mark. Eventually, we see this particular rally getting continued, and for this particular series, the headroom looks open right up to 25,500 as per the options data. So I think the floor is well set. The 24,500 base now looks very firm, and that's why we believe that in a day or so, even Nifty Bank could scale back to 51,830, 52,000 kind of a zone where it's 20 day exponential moving average is placed. So I think overall it is a very healthy scenario. The momentum looks strong, and with both IT and the banks leading from the front, I think 24,000 would be seen relatively quicker in the coming weeks itself.
What would your stock recommendations be? What looks attractive?
So two trading ideas, both on the long side. First one is a buy call in Naukri. Info Edge has been outperforming. It has been scaling higher with forming a higher top, higher bottom sequence. We have seen a fresh breakout from bullish flag formation. The pattern target is placed somewhere close to around 74.80. But from a trading momentum perspective, we may see a swing towards 73.60. The stop loss for the trade should be placed at 71.40. So disclosure from our end that we have right now given this particular trade to our clients as well. And the other stock which is hit my radar is Exide Industries. Now the stock has been forming a base somewhere close to around 550. If you look at the overall sequence, it has just given a fresh breakout from a falling wedge formation, which is again a reversal signature. So I think the pattern is indicating a target of around 590. So probably we may see a quick swing towards the same. The stop loss for the trade should be placed at around 542, and fresh long positions can be considered in Exide Industries as well.
Okay, all right, got that. Thank you very much for those trading calls. Let's kick it off. Then a lot of stocks in focus this afternoon. Let's start first with what else but Shriram Finance. This stock has gone into another orbit altogether after coming out with the first quarter numbers. So what is it that the street liking so much about the Q1 print? Abhishek is here with the details. Abhishek, what's happening here?
Well, the asset quality has improved in a seasonally challenging quarter, and that's what's taken, the stock up in trade today. Net interest margin has softened sequentially, but that's on account of two key portfolios which have declined on a quarter-on-quarter basis. That is the gold portfolio, which has declined more than 2% quarter-on-quarter, and personal loans, which have declined by 0.6% quarter-on-quarter. So that's led to a bit of softening on the yield side, and that's impacted the net interest margin. But improvement in asset quality augurs very well for them. So take a look at the gross NP ratio is down to 5.39% versus 5.45% in the previous quarter. The net interest margin has declined on a sequential basis. Net interest margin is at 8.79% versus 9.02% quarter-on-quarter. But YOY, the net interest margin has improved, so that compares to 8.32% in the same quarter last year. In terms of business momentum, disbursals, they are at 37,710 crores, which is up nearly 23.8% YOY and a decline of 4.1% sequentially. Sequentially, it's a seasonal factor. Disbursals to AUM ratio, that's remained steady at about 23% when compared to 25% in the same quarter last year and about 27% in the previous quarter. AUM growth is healthy at 20.8% YOY and about 3.8% sequentially. Sequentially, it's a healthy growth despite the fact that seasonally Q1 is weak. So in terms of P&L, the net interest income is up 20.6% YOY and 0.35% sequentially. Provisions are down 5.9% quarter-on-quarter. PAT is up 18.2% YOY and about 1.8% sequentially. Back to you.
Okay, thank you very much for that. I remember even Q4 was a very strong quarter for Shriram Finance. So this is at least the second consecutive quarter. And this year, the stock has seen a 42% rally. Prakash Diwan is now with us. Prakash, strong growth numbers, 20% jump in AUM, improvement in asset quality. Where does the stock go from here?
Good afternoon, Rima. So, to be honest, the quality of the book that Shriram runs has always been very nice. So, the fact that NPAs have come down, asset quality is improved, really is not the big trigger. What's important is look at it from a positioning perspective. Ever since it's come into the Nifty, it's in the last 12 months, for instance, it's done about 60% YTD, about 40% plus. So there's a lot of allocation that's coming its way in terms of people moving out of the Bajaj finances and the other that's coming in its favor. But I don't think these numbers are something.
Button over there. Prakash, allow us to come in over there. I think there's a bit of a patchy issue with that line. We'll reconnect and we'll come back on Shriram Finance. Let Prakash just come back on that line and log in once again. In the meantime, we've been talking about this market, which is on a bit of a dream run. So Shriram Finance is obviously leading from the front. It's not the only one. I mean, even on the large cap screen, the disappointment with which, say, a stock like Tech Mahindra started in the morning, I mean, Tech has completely turned around. I mean, Tech Mahindra is now positive from a 4% cut to about a 0.5% increase. That's the kind of trajectory that the stock has had. Look at some of the other movers and shakers. Divi's, Apollo Hospitals, so some of these names from the healthcare space, pharma and healthcare, they've done well today. There is buying on other IT stocks as well. Wipro, LTI, Mindtree, these are holding up. It's across the board, really. Then you've got something like an ITC contributing quite a bit, 3% of an up move, and a massive one, actually. Look at the intraday chart on ITC. A lot of buying in the last half an hour or so. So big moves coming in on these stocks. And Rima, if you start going to the mid-cap screens, then, well, then we could just go on and on listing stocks, right? It's a complete green day.
I think one case in point is Emphasis.
Yeah.
This is a company which has seen no growth in Q4. It's not that the company is committing to very strong growth. All they said is that, this year we will do better than the industry. Then we asked them, what is the industry likely to grow at? I remember Nigel asking that question. And he said, well, estimates seem to suggest that it will be low to mid-single digits. So here is a company which is going to keep its margin steady within that margin band, grow its top line by, say, mid-single digits, maybe slightly ahead of that, and the stock is reacting with a 7% kind of an up move.
Yeah. So just like Shriram Finance as well, right? I mean, as Abhishek also explained, the numbers are fine. Asset quality is marginally improved. It's not like suddenly they've delivered some 30% growth this quarter or unlike or unheard of numbers. But perhaps the market's just, like you're saying, people really looking for ideas. There's too much money chasing stocks.
Checking Shriram Finance, this is the 5th consecutive strong quarter for the company. So it's just the consistency with which it's been reporting strong numbers.
I think,
5th consecutive quarter.
I think with Shriram Finance, the stock had sold off also. The high on Shriram Finance is about 3,100.
Okay.
And it had sold off to whatever, 26.50. So it basically is just whatever, it's come back up after the earnings. I mean, you made money in something, numbers are good, so buy it back. I mean, I think that is also perhaps possible. I read this, you were talking about Emphasis, right? I think I read a note which perfectly captured it. Modest earnings, a decent TCV, which is the contract value, and optimistic commentary. Yeah. I think that summarizes essentially what Emphasis has done and what the stock is doing.
I think we have Prakash with us. Prakash, you were making that point on Shriram Finance. Just complete it because we couldn't quite catch what you were saying due to a scratchy audio.
Yeah, my apologies for the bad connection. But yes, so what I was talking about on Shriram is, Rima, Shriram has always been known for very good quality. The book has never been suspect. So it's not just the lowering of NPAs that is kind of getting the street excited. It's ever since it's moved into the Nifty, there's been some allocations that have come its way. But now, given the consistency of numbers, I'm sure a lot of more money is being allocated to it as compared to the Bajaj Finance and L&T Finance and all of that. So it's more of a shift. So the market's kind of come to recognize that this is a stock that's not overvalued. 2.3 times book historic. It's not really. You're not paying top dollar for it. And there's still some valuation comfort. So I think that's precisely what's happening. Otherwise, I didn't see anything in the numbers which should get the stock so excited. But it's more positioning that's working in its favor.
Okay, let's do a quick check on Midcap IT. The two numbers that came out today, one is Emphasis, and that's up 6%, and on the way down is Cyient under pressure. Now for Emphasis, Q1 numbers were very, very muted. There is nothing to write home. In fact, a miss on the top line as the revenues declined by 0.1%. So flat revenues. But what the street liked are the deal wins. Deal wins were strong. And not just that, even after strong deal wins, the pipeline continues to grow for the company, which means they've managed to replenish the pipeline, and the pipeline is up 17%. And it's also large deal wins. The company won 3 large deal wins, of which one of them is $100 million. And also now companies are able to, categorize AI or Gen AI related impacts. So Emphasis said 1/3 of their pipeline is Gen AI related. Remember, even TCS talks about their AI pipeline, not just Gen AI, but the AI pipeline, and now you've got Emphasis talking about it. The company said they will deliver industry growth above industry growth average in FY25. They're maintaining their margin guidance at 14.6 to 16%. They're confident that they will at least maintain, if not expand, margins from current levels of 15%. And their diversification strategy into different geographies, going beyond BFS, going beyond the top clients, is bearing fruit. On the other hand, Cyient is under severe pressure, and it's still down close to about 5 to 6%. Big decline in the company's revenues. The key segment we track has seen a revenue fall of 5%. The company's lowered its full year guidance. Now they're saying this DET segment, which is the main core business, is going to be flat revenue growth in FY25. And that also analysts are skeptical, because they're saying if the company has to even achieve flat revenue growth this year in FY25, they will have to do a 3% revenue growth in Q2, Q3, Q4, which is aggressive, or it appears to be, a tall task for the company. The only thing which works for Cyient's favor, according to brokerages, is the valuation. So according to Nuvama, cheap valuations limit the downside, and even Kotak had a buy call just purely on account of valuation. So the downside is protected, but clearly there is no growth coming in for Cyient.
Okay, that's a view on some of the Midcap IT earnings that we've seen. Prakash, comment on this, now that we've heard from almost all, and it's very clear that it's not uniform across the board. The larger guys, TCS, Infosys, they're definitely doing well, and they seem to be getting back on track. Wipro's recoveries, there's still a debate around it. Likewise for Tech Mahindra. And then you have the mid-cap plays. What is your top IT pick, if at all you will allocate fresh money to IT now?
So it's getting quite difficult to put fresh money to work on IT, because you missed out on the catch-up rally, which is evident. But of course, some of the mid-cap names, the way they've started performing, whether it's Persistent, whether it's KPIT, Emphasis now, it tells you that some of these players, and I mentioned this when the earnings season started, that all of them have their niche which they're focusing on and trying to grow with it. So if that continues, you'll probably see another 10-15% there. But one of the stocks that hasn't done much and has immense potential from a DNA and business model perspective is Tata Tech. Ever since it got listed, there was a lot of hype. Of course, the market was like that. It's corrected a bit, softened in terms of valuations. But I think Tata Technologies is something which could surprise the street once some of its projects starts kind of, getting into that commercial phase. So there's lots out there in terms of work in progress. You'll have to wait for it to this thing. But the management sounded confident last quarter. I'm sure the numbers will start capturing some of the salient. So look at that. It's quite reasonably priced. You have a fairly decent risk reward from that perspective.
All right. Well, take a look at IDBI Bank flying away. That stock was in the red. The street is hoping that maybe that divestment will finally take place. So that explains why the stock has moved to the high point of the day as we speak. In today's chart tells you the picture out there. Prakash, I want to quickly ask you about Vedanta. Mr. Agarwal, a few months ago, in September, I recall people are fearing whether or not there's going to be a default. Now, suddenly he's gone ahead and raised more than $1 billion from the market itself. And the bankers actually, they would like to do business with him. Look at the balance sheet right now. Today, they have a dividend payout, and that's why I think the stock is quite excited as well. Though we did see some selling, maybe by the hedgies who were there in that QIP. What's your view at around 445? The stock looks fairly okay in terms of valuations. They have triggers, divestment of the steel asset, and various other triggers on the aluminium business as well. Your take at 445?
So I would be a bit cautious, Nigel. Again, as I said, we've discussed this quite often. And when it was at that 385 zones, there very clearly was an upside because of the global commodity move that was underway. Of course, that's taken a pause. We've seen most metals kind of, making some multi-month lows in that sense. But where Vedanta will score is if the balance sheet, the way it's getting shaped up to be stronger, and that divestment program is fairly short in terms of, the timelines that they come up with, then you have at least their ability to be able to invest in the right kind of businesses which are growing. So when that happens, you could probably relook at it. But right now, if you really ask me, you probably are not, there's not too much of headroom beyond here, and it will go through a time correction or a consolidation after this dividend. So let's wait for that. But yes, definitely something you need to look at given the change in the balance sheet in the last 18 months. It's dramatic. So the impact could also be long-term and long-range and not just sputter out in the short term.
Okay, Prakash, we need to slip into a very short break. On the other side, we'll also invite Aman Chauhan from Abacus Asset Managers. Stay tuned.
An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Vikasit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties.
Welcome back. You're with us on Closing Bell, and the market continues to move from strength to strength. By the way, we're already back to the highs of the day, and we're barely, 30-odd points away from fresh all-time highs. Let's say, I don't know if it happens today or not, but for all practical purposes, we're almost there. Now, this week really belongs, not just this week, perhaps even this month, belongs to life insurance stocks. These are stocks that have gained anywhere between 10 to 15% and 16 to 23% if you're looking at the monthly tally. So what are the reasons? Well, for some, we've seen good results. Is there anything else that's powering this kind of a move? Let's bring in Yash to understand what's going on here. Yash, quite a week for insurers.
Well, Surabhi, quite a week for life insurance companies, and the month has also not been any less impressive for all these companies across board. And the big question that leaves us, the entire move leaves us with is that can this year belong to life insurance stocks? That's the big question that we look out for. The stocks have moved anywhere between 10 to 12% in the last 1 week, about 17 to 23% in the previous 30 days. If I just have to look at individual performers, HDFC Life is up 12% this week, 21% this in the last 30 days. ICICI Pru 15% and 23% move. Max Financial 12% and 17% move. SBI Life 11%, 23% move. LIC 10%, 22% move. So pretty secular in its very nature. I pointed out 5 reasons which could have brought about this very, very strong move for life insurance stocks. The first one is the financial results itself. HDFC Life, ICICI Prudential Life, SBI Life, all three reported their numbers in the previous 30 days. We still have results which are weighted from LIC as well as Max Financial. But HDFC Life, very, very strong numbers, followed by SBI Life and also ICICI Prudential Life. Look at the numbers. Annualized premium equivalent growing at 23% for HDFC Life, 20% for SBI Life, 34% for ICICI Prudential Life. Retail APE growing anywhere between 21 to 57% for these companies. VNB growing at 18%, 11%, 8% for HDFC Life, SBI Life and ICICI Prudential Life. Margin compression has also been very limited. The strongest in this case has been HDFC Life. Apart from that, expectations of a strong FY25. All three managements have guided for about 20% APE growth. They've said that margins will inch up in this particular year, so that's also fueling the move. There is no negative news from the budget on insurance taxation, so that was one overhang out of the way. The market is expecting that there won't be any regulatory intervention from IRDAI also, and also these stocks are trading at a big discount from their last 5-year average historical price to embedded value valuation. So that's another valuation support or comfort which these stocks are getting.
And Yash, I remember you coming to me and saying before the budget that the fear is there could be something negative, and that one table in terms of that 1 week change which came, that is essentially this budget week, because the day of the budget I think stocks rallied, and after that I mean they've continued to, I'm assuming, rally in relief. It's also coincided, as you said, with lots of the numbers, etc. Thanks very much. Sort of pretty instructive sort of compilation of what's happening. Aman Chauhan is with us, fund manager at Abacus Asset Managers. Aman, good to have you with us here. Good afternoon. Prashant this side. You heard the reasons from Yash. I want to add one more reason to it, potential reason with a question mark. How much of it is, according to you, I mean, could also be sort of the hunt for ideas, new ideas, not new, but, things with not very demanding valuations, large liquid sector, some growth sort of on the horizon. How much of it is that, according to you, Aman?
Part of it is true because the sector had underperformed, and in a bull market, it's always a relative valuation as well as people keep on hunting for new sectors, new ideas. And there's always a rotation. 1 week a certain sector does well, next week we need a new sector to move in. It happened with IT. I believe it is also happening with life insurance. But it's not just that. Even the business is picking up. The fear of something coming in the budget is now behind us. And hence, incremental liquidity is moving towards this sector, which anyway is a decent secular sector to bank on, which is benefiting from the macro tailwinds as such.
So are you overweight on insurance companies? If yes, do you want to throw some more color on which one to hunt after the kind of up move?
So we have an insurance exposure in our portfolio. It's not a recent one. We have it since years now, and we would have a mid-single-digit exposure to insurance, and maybe at an appropriate time, we might look to increase that exposure. But for now, we have one of the, you can say, top 5 large insurance companies in our portfolio.
Aman, hi, great to have you on. I mean, just again, another point of conjuncture. What seems to be happening with banks, at least from some quarters, the inputs that we gather, and some of them are actually, perhaps foreign desks, there's some rotation away from banks because one section of the market feels that this whole banking issue will take some time to sort out. The fight for deposits, margins, a lot of regulatory overhang from the RBI. So perhaps it's some of that money shifting, looking for newer homes, and insurance, like Prashant said, perhaps being a relative value home. Just give us your thoughts on that, whether that could be a possibility, and your own stance, because in the past, I remember you've been quite constructive on large banks, particularly the private sector ones, right?
Right. So we continue like the banking space, but incrementally what is happening is post the current quarter numbers, whatever we have seen is that looks like we are near to the best of the credit costs. So the NPS can inch up from here, both for the private as well as the PSU banks. And that is something which the street, at least in the near term, is not very excited about. We also are very constructive on the non-funded financials. So that is where also we have exposure. So we have insurance companies, as I just mentioned, and we have wealth companies, we have broking companies, we have AMC in our portfolio. So it's an equal balance for us, financials as well as non-financials within the BFSI basket. And as we speak, incrementally, we feel the non-fund-based financials can do better than banks.
Hi, Aman. Good afternoon. Good to see you. When, one positive besides the fiscal prudence that the finance minister spoke about in the budget was the capital allocation. No tinkering out there, held it at around 11 lakh crore, which was read positively. You have mentioned in the past that you're like EPC, you're like some of these infra names as well. Are you still positive out there, even from current levels? Because some of them have already seen a big re-rating.
Some of them have, but there's enough scope for them to move up further because of the way civil infrastructure is being set up in the country. I believe they have enough scope for these companies to continue to grow. So right now, most of these companies are projecting to grow anywhere between 20 to 30%. And this can continue for the next few years. And for a 20-30% CAGR growth company, these companies are trading somewhere close to 15 to 18 times multiple. They can easily re-rate to around 20-22 times multiple. So we continue to remain positive on this space, both EPC as well as companies in the infra space.
I got that. And what other pockets? Telecom is doing very well. Indus, Idea, all these names. That's as a theme. Do you like it? And any other pockets which you think will do well, where there is still relative valuation? Because I guess it's about a lot of it is about that now.
So telecom also we like, but we are restricted to the top name in the telecom space in our portfolio. Besides that, incrementally, we are getting more positive on the pharma and the chemical space. We see things bottoming out there, and incrementally margins can surprise on the upside. And with like life insurance, even these sectors have not been great performers in the past few quarters, and there can be a good catch-up rally in this segment also. So these are the two other segments which we are incrementally more positive today than say what we were 6 months back.
Aman, can you elaborate on that? Because chemicals is a vast space, right? So I know you can't talk stocks, but just incrementally, where do you see the cycle bottoming out and maybe finally turning up within chemicals?
Bulk chemicals are looking good. The imports that we see from China and from other regions is also down, both because of freight as well as for other reasons. So that is something that is looking exciting. Any chemical company which is facing competition from China is bound to do well. And companies overall, if you're not importing your raw material from China, because that is going to get more expensive, but even agrochemical companies for that matter, we are seeing good monsoons being so far, demand should pick up. The inventory issues which was there in the last season is not there this season. So that segment also within chemicals is something that is looking exciting to us.
So I mean, you're saying agrochemicals is looking up. Can you tell us, is it going to be like dyes and pigment companies? Is that the area to look at? Fluorochemistry? Specifically, what should one go out and study really, as you're saying that the cycle is overall improving?
You can look at bulk chemicals, need not necessarily dyes and chemicals, but some the bulk basic chemicals, soda ash, chloralkalis, that kind of segment that is also now starting to look up.
Aman, I remember you were neutral on IT. Is there anything in this quarter's earnings in the commentary which makes you incrementally more bullish?
No, we stay neutral. We are not bearish, but not that view has changed post the quarterly numbers. Numbers were in line broadly. Commentary also has been broadline. Demand seems to have bottomed out, just waiting for the right time for it to pick up before we get more constructive. So we have some exposure on IT. It will be say single digit in most of the portfolios. Just waiting for absolute demand to pick up before we add on.
Have you changed your view on any sector, any theme in the last, say, 1 month? Any trends that you would like to highlight for our viewers?
Not much. It's particularly the same sectors that we like pre-budget. Not much of change because of budget per se or anything in the last month or so.
Aman, metals, the index is up 3%. Is it a global kind of a play here, or what's going on in your opinion?
Metal is always global. So last say 2 weeks there was some pressure on the metal prices. Seems to be in the near term that has got arrested and it could be headed up, and hence we may having a catch-up rally or maybe a short covering the metal space today.
Aman, finally, just want to get an idea of the mood out there when you are speaking to clients, and many of your investors are obviously HNI, ultra HNI, players. What is the sense? This money that's coming in, are they very happy to write the checks even at these levels, or are they holding back? And this money that's coming in now, is it coming in with a 3-year view, or are people still expecting great gains in the next 1 year? What's the sentiment with this market frenzy?
Broadly, the sentiment remains that people are underinvested. They want to increase the equity exposure, just waiting for the right time. And that's the reason we see that even an intraday or a 1 or 2 day fall and people come in and lap up the opportunity. So maybe that's one of the reasons why markets are not seeing any deep profit booking per se. So overall, that's the sense we see, that people want to increase the equity exposure, just waiting for the right stock, right time to come in. And that's the question people ask us as to how should we come in? Is SIP the right route? Are we coming upfront, or how do we stagger it? So I don't think anybody has a doubt on equity markets per se. Not many are worried on the valuations front. They have made good money and the sentiment is pretty positive. Post-budget also is a surprise, but sentiment stays positive.
Well, with Cipla numbers on the screen, top line slightly shy of estimates, but I think at the EBITDA front and the bottom line level, those numbers are above, and the stock's doing really well. We'll just get some more analysis going on that. And I mean, I just wanted to complete the point. So valuations are not a deterrent, and clearly neither is tax, right? What's been the chatter this week that you picked up within fund managers, within investors? Is anybody bothered because 10 became 12.5? Or no, life goes on?
Life goes on. It's like we have to pay tax only when we make money. So let's focus on making money. Tax will compose that.
No, absolutely. So you make a little bit more, right, and pay that extra tax. Right? That's the, at least, I mean, the color. So yeah, you're absolutely right. That's what we picked up as well. Not really bothered. I mean, little unhappiness at the margin, obviously, but no one is really taking this as a negative cue in that sense. Thanks very much, Aman. Great speaking with you. Sorry, you want to add something?
No, that's it.
Okay, all right. Thank you very much for joining us. It's great speaking with you. Have a good weekend, and we'll speak again. Thank you. 400 points, by the way, on the Nifty. We are sort of cruising along. 24,821 is where the index is at. So the high was 24,854. So still about 30-odd point distance between where the high was and where we are now. Cipla has moved up, I think, to the high point of the day. The stock will come up on your screen. Yeah, it is. It's a sharp spike on Cipla, as you can see. Margins are looking much better. Wow, 25.6. Ekta will join us shortly to run us through and put the numbers in context. But the poll in terms of margins and what the expectation was came up. And I think there's a 150-odd basis point beat there. Revenues are up about 6%. These are actuals year on year. EBITDA is up 15% year on year. So those are numbers from Cipla. We were sort of complaining about how, at least I was complaining about how numbers till yesterday, there have been many more misses as compared to beats. But you still have the bulk of the earnings season ahead of us. Will we see a bit of a reversal there and some better numbers? Let's hope so. We'll take a break. We are back with D Street chatter. Nimesh is, of course, been working the phones. He'll tell us what's the buzz, what are the stocks to watch, and of course our trading ideas as well. Stay tuned.
Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees.
Welcome back. From strength to strength, the market's holding with solid gains as we speak, and it's that sort of a day where you look across the screen and it's a sea of green. Well, Nimesh joins us right now to help us out with dealing room chatter. Nimesh, super duper day.
Well, in a super duper day, 400 points and counting on the Nifty. And actually, Nigel, today's move has caught everybody by surprise. It caught me also by surprise because, while there was a sense of some bit of buying has resumed, I spoke yesterday as well that there is a basket buying. Even today, there is a basket buying at the leading FI desk from the larger FIs. But it looks like today is more of redeployment of cash from the domestic mutual funds, the amount of cash they were sitting on. Because if you look at today's rally of 400 points, it's all broad-based. It's not a single large, Nifty name which is pulling the Nifty up. It's across the board. In fact, Reliance is relatively, so to speak, underperformed. ITC is not participate big in today's up moves. It's broad-based in the Nifty stocks today. While the mid-cap index looks smart, a 1,000-point rally, but if you look at in the broader context, it's relatively underperformed. So today's purely a large cap, driven, broad-based, delivery-based buying kind of a rally is the sense that I'm picking up. So that's something to look for. Even the bank Nifty, while it is recovered from the day's low, from a flow perspective, I understand there is selling pressure. In fact, there is an MOC sell as well in some select bank stocks, both private banks as well as PSU banks. So you might see a bit of reaction in the last 30 minutes in the banking names, but in largely today's rally has caught a lot of people by surprise, and it's purely delivery-based buying in the broader market stocks.
Oh, that's good news then, for the markets to see delivery-based buying. But what about individual stocks? What are you picking up?
Well, as I said, there is a lot of buzz in the market. So the first stock is Hindustan Construction. Big move in that stock. The volumes are on the larger side. In fact, off late, the stock has seen a bit of a traction as well. And I understand some large HN investors are quite active buyers in Hindustan Construction. So that's the first name. The second name is Bharat Forge. While the entire auto names have done well today, Bharat Forge stands out purely on the back of very strong buy flows. So expect high delivery volumes in that particular name. The third stock is Vedanta. We just saw the announcement of the dividend as well. But while the stock isn't buzzing, remember on Monday you're going to see a MSCI rebal of around 1 crore shares in Vedanta, and that's the reason why that stock is buzzing as well. The last is India Cement. Big move on that stock in the last 1 month itself. from almost from 270 to 370 now, a big rally as well. Now the street is anticipating some further corporate development in India Cement, hence a big up move in that name as well.
All right, got it. Thank you so much for all the chatter and the buzz today and through the week, Nimesh. Well, speaking of the buzz, I mean, look at Cipla go 6%. That stock is soaring, I think, on a very, very strong US sales number. 250 million is how much they've done. That is way above the poll that Ekta was telling us about. In fact, she's here with us. Ekta, what a move on Cipla.
Excellent set of numbers coming in from Cipla. You know, the revenue is a single-digit growth of around 6% year on year. But what the street is looking at squarely is basically the margin performance, which is coming at, I think, around 25%. And that compares to around 21% last quarter. And the key driver would be the US sales this time around as well. So the US sales have come in at $250 million versus versus around $220 million that they did in the previous quarter. So $250 million, the street wasn't anticipating such a figure to come through so quickly for Cipla. Now, what we need to see is that how much of it is probably attributed by one-off opportunities such as Revlimid generic, and what the base sales for the company would have looked like. Remember, they guided towards margins of around 25%. Umang Vohra did guide for margins of around 25% last quarter, and they've delivered. And that's the reason why the stock is higher, because they did manage to do that despite having regulatory concerns around their Goa facility. And, the stronger than expected US sales is the key driver. So margins, US sales is really what the street is reacting to at this point in time.
Thank you very much for that. Let's move on and talk about ICICI Bank. That will be reporting numbers. And this week we've had some misses on the banking front, whether it's Kotak Mahindra Bank or even Axis Bank. So the test will be what ICICI Bank reports tomorrow. Abhishek joins in with the details. Abhishek.
Well, the miss, as you spoke about, was largely on the net interest margin side, given the fact that cost of deposits have increased for lenders. So let's wait and watch how that behaves for, ICICI Bank. Deposit growth is expected to remain healthy at 17.8% YOY and 3.3% sequentially as per Motilal Oswal estimate. Loan growth expected to remain in line with industry trend at 15.9% YOY and 3.5% quarter-on-quarter, again Motilal Oswal estimate. Net interest margin can decline YOY and quarter-on-quarter given the fact that there is pressure on cost of funds. Morgan Stanley estimates net interest margin decline of 46 basis points on a YOY basis and 8 basis points on a sequential basis. Sequentially, Q1 is a weaker quarter for all the lenders, so provisions could rise on a sequential basis. Morgan Stanley estimates credit cost to rise by 45 basis points YOY and about 21 basis points sequentially. Asset quality can see seasonal impact, so gross NPA ratio expected to inch up by 10 basis points to 2.3% versus 2.2% as per Motilal Oswal estimate. Management guideline with respect to business momentum going ahead will be seen closely. Our polls suggest an ag growth of 7.9% YOY and a profit growth of 9.5% on a YOY basis. Back to you.
All right, Abhishek, thank you very much for that. We'll take a quick commercial break here. There is about 13 minutes to go for the market closing. We're going to take a break. We're coming back in just a bit with Hemang Jani, and we continue the market conversation. Take that forward. Stay with us.
Three to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%, and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the accelerated irrigation benefit program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grabs.
Welcome back now. Well, the world is all gearing up to the Olympics, which is a once-in-4-year spectacle. It kicks off today in Paris with an opening ceremony, and the city is wearing a festive look to welcome athletes from all over the world. From India, a total of 117 Indians are participating in the Games, and the goal will be to better the tally of 7 medals from 3 years ago at the Tokyo Olympics. Sanjay Suri now gets us up to speed on this. Sanjay.
The Paris Olympics open later this evening, but just what we will see through that long-awaited opening ceremony is the big secret. We do know that it will all principally be on and around boats sailing down the River Seine. But of course, there will be more to it than that. It just won't be about boats passing by, cheered by hundreds of thousands along the banks with the athletes on board waving back. Some of what the rest will include has sprinkled through, and we know there will be artists performing on the banks of the river and on islands in the river, as many as about 3,000 of them, but exactly who, what, where is that closely guarded secret. Among them, certainly some star performers who we will recognize. We've been told there'll be 94 boats carrying about 7,000 athletes down the river, but then 206 countries are participating. So will some boats carry athletes from more than one country? And how many boats then will the Americans need? They are coming with 592 athletes. India has 117, so that makes for a reasonable sort of boatload. But what about the smallest countries? Will some of those get a canoe? The official word from Paris is wait and see for yourselves, because none of this sparse information on the ceremony that we have may necessarily be the last word. The key word certainly is surprise, and the organizers are keeping it that way.
Okay, all right, Sanjay, with the report that surprise is going to be, I think, revealed shortly as the ceremony kicks off, and of course, the big celebration of world sport really starts off in Paris later this evening. Looking forward to that. I'm sure all of us are. Okay, let's welcome our next guest on the show. We have Hemang Jani joining in. Hemang, I don't know if you are going to follow the Olympics or not, but the market is sort of doing its own athletic jig, right? It's pole vaulting away to newer highs. In fact, we almost hit fresh all-time highs today as well. Budget has come and gone. The bulls are still charging. What are you buying?
Yeah, good afternoon. Yeah, so today's move is a big surprise. After seeing the kind of volatility in the global markets and budget not being so great in terms of at least the headline, per se, because of the way they have managed the entire capital gains and stock market related announcements. So despite that, to see this kind of a move is definitely a bit of a surprise. But I think the fact of the matter is that the liquidity flow is good, and I think people are probably hoping for rate cut very soon, and which is what is reflecting in the way the markets are moving. So I think it would be good to kind of look out for these sectors or themes where you still have earning visibility rather than just chasing the momentum. So we are pretty much trying to do that.
So you're comfortable buying at these levels. Are you putting money to work? And wanted to get your thoughts in on Paytm, where they've got the approval, the government's approval for the FDI proposal for the payment aggregator business. Can you explain what this means for Paytm?
Rima, I think Paytm, on and off, we do get, some news or updates about either somebody trying to acquire them or RBI giving them some relaxation. So this, if there is an approval for the payment aggregator business from FPI, it clearly means that the way they are currently managing with multiple banks, there is going to be some sort of a clarity on what kind of business they can do on their own without them having to tie up with multiple small finance banks. And surely if some approval comes by, then it may pave the way for a bigger, M&A related move. So maybe that is why you're seeing a bit of an action. We think that's a high play because, regulatory approvals, it would be very difficult to time. So if somebody has a, risk appetite, maybe one can really go for it given the kind of, weakness that we have seen. But timing is something that is very difficult to gauge at this point.
I mean, it's also been accumulated by some super HNIs over the last 2 months or so. So, I mean, at about that 450 odd levels. Now, of course, coming up to about 510. I mean, of course, the bet is that the ship will be, it'll be back on track in a different shape and form. But it'll be much better. That's of course the bet that many are making out there. Insurance, Hemang, I believe you have a view because that's clearly the sector of the week. Yash was telling us earlier as well. But it's life insurers, but it's also the government insurers, GIC and New India Assurance. Your thoughts?
Prashant, I think this has been a sector which has remained a laggard for an extended period of time, and you're seeing a bit of a revival when it comes to the APE or most of the other parameters. And typically you do see a bit of a rotation between the NBFC, banks and insurance at some point of time. So I believe that both these factors are at play, and you might see a bit of a catch up when it comes to insurance. We've been liking HDFC Life, SBI Life. And when we are talking about the smaller PSU general insurance companies, you do see very large move occasionally. So there is nothing material which has happened in terms of news flow, but I think it's just a kind of momentum play that some people are trying to participate in.
Okay. Hemang, on the mid-cap side, we've seen so many earnings throughout the week, right? Large earnings as well. Ashok Leyland, Memphis, lots of mid-cap IT names as well. Anything that stood out for you? Anywhere where you have been pleasantly surprised and, enough to perhaps even merit a buy?
Emphasis is something that we feel the numbers were pretty good. Some of the auto ancillary companies, the numbers have been pretty good. When you look at Motherson and few others. So clearly that's been an area where you're seeing a good amount of action. BBL, Varun Beverages, the numbers have been pretty solid. So I think some of these pockets, clearly the numbers have been good. But I think the Pharma, the action that you're seeing is not necessarily relating to the quarterly numbers, which have been good. But I think people are hoping either some policy change in US and the pricing scenario, which is getting better. So there is a slightly more focus towards pharma at this point of time.
What about Ashok Leyland? Came out with numbers yesterday. Numbers were okay, but the commentary was strong. They spoke about how volumes are back to the levels that they were in Q1 of FY19, 5 years back. CV volumes are at a high. And the stock has seen some follow-on buying, 6% gain. Thoughts on Ashok Leyland?
I think there is a lot of catch-up at play because for almost about 3 to 4 months, the stock actually underperformed. Post numbers and post management con call, there is a sense that the overall volume growth next 2 quarters is going to be very good. On the EV front, they have made some interesting announcements. So I think, a combination of this is playing out when it comes to Ashok Leyland. I would not be very comfortable buying into it at this level now that it has already gone up to almost about, 250 odd levels. So would avoid buying fresh at this point of time.
Okay, got that. Hemang, we will leave the conversation there today. Thanks so much for joining in. You have a good evening and a good weekend, and we'll connect again soon. Let's start wrapping out what has been a bazooka of a week for the market. It has taken so much thrown at it, and it has emerged victorious. That index is practically at all-time highs. 855054, 854 is the all-time high, 53, 54. There you go. We are closing at fresh all-time highs on the Nifty. It is a bull charge, and it is the bulls in control all the way. Even though we are sort of closing down, maybe we can get those all-time high banners, the streamers up, because it is a fresh all-time high. 24,860, in fact, has been hit. What a week for the market. Massive, massive surge today. 450-point rally. And the mid-caps have also been not far behind, 2% up on mid-caps. But it is the large-cap story, the large-cap catch-up that we'll start off with. Key movers and shakers, Shriram Finance on earnings, 9.5% up. Cipla on earnings, 6% higher. Divi's Laboratories, 5.5% up. Bharti Airtel, 4% higher. Then you have quite a few of the technology names like Wipro, LTI Mindtree, HCL Tech, Infosys, all of these stocks, anywhere between 3 and 4%. On the tech side, really more than making up for the fact that banks have been sluggish. Even for that matter, banks also cut their losses. The way we started the day and the way we are ending it is fairly different. Axis at least has flattened out. HDFC Bank has also flattened out. Let's talk about more contributors. In fact, ICICI Bank was better than the others, 1.5% up. There's SBI, which is up in about 1.5% higher. And of course, Reliance played its part as well. You know what? Actually, on the Nifty, there are only 2 stocks worth mentioning on the negative side. Only 3 red ticks. Out of them, ONGC and Tata Consumer are down by about 1%. Nestle is flat. It's not even properly down. So it's been such a fantastic Friday for the market.
Well, and mid-caps are not left behind in the entire party. The mid-cap index ending with a gain of more than 1,000 points. And for the week, it's up 3.5%. And if you thought that, mid-caps, small caps are overvalued, look at the micro-cap index. The Nifty micro-cap 250 is up more than 5% this week. And even the PSUs, indefatigable. The PSC index, CPSC index is up 3.5% for this entire week. Lots of mid-cap action. The new kid on the block, Sanstar, up 21%. Life insurance companies, New India Assurance, GIC, up and about. Ashok Leyland saw buying. SJVN on the back of that order win of 14,000 crore rupees, rally close to about 4.5%. And Vedanta ending higher ahead of that board meeting on dividend. Lots of action, lots of activity. This has been one fantastic week for us, but we're going to take your leave and closing bell. Don't go anywhere. Our Friday special editors roundtable comes up next.
Every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing a Recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths.
Well, a Friday surge helped the bulls end the week on a high. The Nifty and the Sensex gained for the 8th straight week, the longest winning streak in 7 years. On the Editors Roundtable, we take a look at EPS upgrades and downgrades. We also decode why insurance companies are making a comeback. I'm Sonia, and with me are the editors Prashant, Nigel, Nimesh. Also joining us in our new studio is Rahul Arora, CEO of Nirmal Bang Equities. Guys, thanks for joining us on the show. You know, it is interesting, right? In a market where you had a budget, where you had the long-term capital gains tax hike, at a time like that, the market came back in a big way.
You almost would think that the tax has been cut, right? I mean, if you did not follow markets and you just sort of just track prices. But it's almost as we've discussed every day in the morning. I mean, take today, for example. Who would have thought? And Nimesh, we were talking on closing bell. I don't think anybody had an inkling that it would be a 400-point day on the Nifty. No. Right? Asia, it's not as if other markets were doing anything great. It's not as if overnight cues were positive. It's not earnings are surprising, and I'll put some data a little later. But it's just, I think, very, very strong flows. And just, I mean, the hunt for ideas, a lot of sector rotation. Correct. So it's just that kind of thing, Teflon coated, right? Anything you throw at the market is just water off the duck's back.
In fact, you know,
I think it's also because of the positioning, Prashant. You know, we spoke about it last week, right? The amount of cash domestic mutual funds are sitting on. Add to that, you know, in fact, the cash levels have only gone up in the last many days across many of the aggressive funds. So that was the PMSs are sitting on cash. We spoke about large HN investors this week, and they all were like, you know, little cautious and a bit careful and watchful in the market, right? So there's so much of, caution in the market right now that market can't fall when there is so much of pessimism in the market. So I guess that's what is playing out. Too much of pessimism, and now, you know, it's a chase to redeploy that money, so to speak, and that's the reason why we saw a big reaction today. A 400 point on the Nifty.
When they tinkered with the tax rate, you had the ghost of 2008, that 18 that came back, right? Because that day the market didn't fall. Next few days it fell down. Next 40 days it was down 10%. And the broader markets got clobbered. This time around, the broader markets actually have done pretty okay, in the last few sessions. So that's heartening to see because portfolios will be feeling much better.
Absolutely. So, in case you missed out on what happened in the week, right? I mean, it was a really long week given that we had the budget in the middle of the week. But at the end of the week, there was a big recovery in the market. In fact, the Nifty was up over 400 points on Friday. The Nifty is back at record highs now, and there was large buying by domestic institutions as well in the last few days. So if you look at it, as Nimesh was also pointing out, the cash deployment from domestic mutual funds began after the budget and post the announcements that came through. If you look at individual stocks as well, right, many stocks by the end of the week hit fresh highs, whether it was Tata Motors, TCS, Infosys, Ashok Leyland in the broader markets. All these stocks hit fresh highs this week. So very interesting week. Rahul Arora of Nirmal Bang is with us. Rahul, interesting week, but what has your big takeaway been from the budget and there were no repercussions in the market, so to speak, but the impact on the market going forward?
So I think the budget, by and large, barring the tinkering on the capital gains tax, was exactly the way it should have been. There was a thrust towards reviving the bottom of the pyramid. It may not have been very overt in nature, but the kind of outlays, like 3 lakh crores for women, 2.5 lakh crores for infra in terms of jobs, announcing internships, agreeing to pay 15,000 of salary for the formal sector. It was a lot about employment and sort of the bottom of the pyramid. I think obviously there was some political compulsion. So you saw the announcements for Bihar and Andhra Pradesh. I think that was expected before we went in, but nothing to alter the course of the markets. And I think as Prashant was saying when you guys started the show, I think even if you go back to the day the election results were announced, the lowest point of the day that day was minus 2,000 for the Nifty, and it closed only minus 1,300. So you had a 700 point pullback from the day's low. You saw something similar a few days back, but I'm a bit in a state of shock as to what's happening because I remember being on Bazaar after the state elections, and I think the Nifty then was about 19,000, and I think we were discussing what could happen over the next 5 years if Modi came back, and I had said there's no reason that the market can't double. So we were talking about a 37,000 Nifty, and you've already traversed so much ground. You're at 25. You start wondering what could potentially be. But I think the point Nimesh was making is see, the Nifty has tripled in 4 years. From 8,000, it's gone to 25,000, right? And the size of the mutual fund industry, which was 5 lakh crores at Demon, today is 60 lakh crores. Right. Of that, even if you assume half is equities, which is 30 lakh crores, and even if you assume 3% on average cash of mutual funds, you're talking about 90,000 crores cash in the system just with mutual funds. Add insurance, AIF, PMS, family offices, that number could be anywhere close to 1.5 lakh, 2 lakh crores. So I think gone are the days where you saw material 20-30% corrections in stocks. I think today, because fund managers, CTCs are also locked in to their own funds, the pressure on performance is that much more, and you're watching quarterly movements that much more. So I think to that extent, any fall that you're getting, and I think the reason, Sonia, is if you analyze the top 3 funds in India today, ICICI, SBI and HDFC, you'll be shocked to see the number of stocks that they're owning 10% off. I mean, the money that's chasing the same names, and it's not mid and small caps, it is large, it is banks. And in some cases where they can't buy them directly, they're tying up with their insurance arm and taking RBI approval to buy them. That is what liquidity is. So I think there's no point standing against it. But I must say that we need to temper our expectations. A 3x return in the Nifty in 4 years, this cannot continue. I would be extremely shocked. I still wouldn't be surprised if we hit a 35-40,000 Nifty, in the next 5 years, but that will probably mean a 13-14% kind of CAGR. So if you have those kind of expectations, in which you will have down years, you may have a year where your Nifty is down 20-25% and then rebounds 35-40%. But I think in aggregate, if you look at the next 5 years, you should probably be expecting a 13 to 15% kind of CAGR in the markets, which would probably be what earnings would also give you.
Prashant, as what Rahul also said, I think this market is slave of earnings, right? And you worked on a piece on Wanda. I mean, at least ultimately it pays off, right? That earning has to catch up. In fact, what Rahul said, that Nifty has tripled. Even if you look at the broader markets or for the large cap, large universe, the revenues have tripled and the profits have doubled as well. So, you know, market has, the earnings has caught up as well with most of the companies across broader markets and mid-caps as well. So, ultimately, you know, it's the earnings which is going to support this kind of valuations, right? So, I guess you've put some piece, right?
Rahul, right? I mean, when you talk about longer-term projections, I heard two things. That's just interesting. Chris Wood was in our studios, and he was saying, Ramesh Damaniji asked that question to him. He said, you know, what can happen? How large can bull markets be? His answer was, look at what happened in the 70s in the US with 401ks. And that was a big bull market. Lately, I mean, I think after the budget, I heard someone talk about the Japanese experience, where you had the Nikkei going up. You know, so people are now starting to, I mean, you know, it's kind of going back in histories because you don't have, you're at all-time highs and the markets have done precedent, right? So you kind of, I'm not sure how relevant many of these are, but you're being forced to do that because the market continues to run higher.
No, but I think, Prashant, you have to balance that with price to earnings multiples. I think if you look at most of the multinational companies listed in India, if you see their parents, wherever they're trading at half the multiples. The best stock in the world for the last 18 months, which is Nvidia, you'd be surprised trades at less than 30 times. So, you know, if you're going to compound your earnings, so I think bull markets can last if valuations are reasonable. And I'll just give you a point. If you look at HDFC Mutual Fund, they recently raised a manufacturing and defense fund. See, caution has come into the market. Just take a look at that fact sheet. Only 55% of what they have raised in that 9,500 crores has been deployed. They're sitting on 45% cash in a 9,500 crore fund. I mean, the size of that fund is larger than a lot of mutual funds in India. But I think there is caution that's coming into the market. But I think you've got to base it to valuations. I don't think anything in the US, even at the peak of, you know, the Netflix and the Amazons and the Googles, I don't think anything was trading at, say, the defense companies' valuations in India. So these bull markets can sustain if valuations are reasonable. But when you are,
Nimesh gave a nice example.
Hitachi is trading at 300 times in India, whereas the parent is quoting at, on a forward earnings is quoting at 22 times. So.
Exactly. So I think, you know, we saw that. I mean, you know, I remember when we were, you know, in another avatar when I was working with the promoter of UTV, and we were looking at Disney's valuations and the way they came in. So I think India is just a very distorted market when it comes to valuations. But I think when you balance the scales, bull markets can be sustained very long if valuations are reasonable, but you should exercise caution.
The 2004 bull market started with Nifty at 12 times earnings.
Absolutely.
So, you know, anyway, I'll talk about earnings, which no one wants to hear about. Trust me, no one really wants to talk about earnings in that sense because, you know, people are just busy, you know, looking up, right? Looking up in terms of how high and how fast stocks are running. And of course, earnings come and go. But the interesting and the slightly worrying thing, I should say, is that earnings season so far, and this is a very preliminary look at the earnings season because it is early, right? So as we always do, I do this usually in the middle of the earnings season, and I look at the NSE 200 group of companies, that the NSE 200 index. It's the most liquid sort of, you know, part of the market. It has the mega caps, it has the large caps, and it has mid caps as well. So very well-owned space. And so you basically have, out of 200, 70 companies which have reported numbers. You have 40 companies which have seen EPS downgrades and only 18 companies which have actually seen upgrades. Out of 70, that's not 70%, that's 70 companies. Out of 200, 70 have reported, 40 have seen downgrades, and only 18 have seen upgrades right now. So then let's dive straight into where the downgrades, the biggest downgrades have come in. And it's right up on your screen. You know, I've sort of broadly classified it together as much as I could. Bank of Maharashtra, and this is the EPS downgrade over the last 1 month. So this would take into account the earnings which have come and, you know, what the street has done after that. So Bank of Maharashtra, 16% earnings downgrade. Paytm, 15% earnings downgrade. Paytm was up 10% today, but of course for different reasons. You had the technology companies, Tata Tech seeing a 6%, 6.5% downgrade. Tata Tech is there somewhere. Tata Elxsi, beg your pardon, 6%. Tata Tech 6.5%. Tata Communications down about 6%. You look at some of the other names. Laurus, right, just came out with another very tepid number, 9% downgrade. JSW Steel, 12% downgrade. And you look at a cohort of these companies, Asian Paints, Dalmia Bharat, and SRF, between 4 and 5% downgrade. So the point is, this is just a sampling, but remember the bigger number. 200 companies, 70 reported, 40 downgrades, 18 upgrades so far. Hopefully it'll improve. These are the upgrades which we've seen. HDFC AMC, 8%, Suzlon, 7%, You've got Kotak Bank 5.5%, Canara Bank 4.5%, BPCL 4%. The rest are all insurance companies, right? And I think we've been talking about insurance, and Nigel will talk about this in more detail. But ICICI Pru has seen a 6% earnings upgrade for FY25, in the last 1 month. Lombard has seen a 3% upgrade. SBI Life has seen a 3% upgrade. And HDFC Life has seen about a 2% upgrade as well. So that's basically a quick snapshot. I would admit this is still early with just 70 companies which have reported as of yesterday's close. And we'll sort of revisit this hopefully with a better looking screen over the next couple of weeks or so. Rahul, any thoughts at all?
I think insurance is the interesting piece here, Prashant, and I think a lot of this has to do with both annuity as well as ULIPs. I think if you look at the ULIPs for ICICI Pru, SBI Life, they've grown dramatically. I think if I'm not mistaken, there was a 70% growth in ULIP for ICICI Pru, and annuity grew by almost 125%. Now, what this also does is this skews the VNB margin, because when you're skewed more towards protection, your VNB margins go higher. But I think they'll probably correct themselves. But interestingly, ICICI Pru, which was the stepson of the market for a long time, is now trading on par with SBI Life. Your point about overall earnings, I think we're still in an earnings downgrade cycle. I think if I look at trailing 4 quarters, even at our brokerage, I think it'll be 60-40 in favor of downgrade. So you're not technically in an earnings upgrade cycle, but yeah, insurance is one pocket of the market that has surprised positively, as is Alcobev. I think, we saw that with United Breweries, and I think even from the oil and gas space, something that doesn't get discussed often, I think Petronet Energy stood out for us, in a very material way. But apart from that, I think from the earnings that sort of have gone by, I think United Spirits, Insurance, Petronet Energy sort of come out. And of course, when the earnings season started, you had, TCS, Infi were not as bad, and we saw the reactions. But I think on balance, it's been a bit mixed with some of these standing up.
Okay, let's do one thing. Let's take a quick commercial break. When we come back, we'll get talking about more of the market trends and all the cues that you need to watch out for next week. Do stay tuned in.
Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the annual information statement.